All right. Hello, everybody. Welcome back to the show. We are here for another market close. It is Thursday, December 19th, 3:45 p.m. We only have 6.5 days left in terms of trading days for the rest of 2024. So we are getting close to the end of this year. And that means we have a couple of companies left that are going to report earnings, two of those being Nike and Fedex. Very important companies, actually. Fedex, one of the largest companies that transports products pretty much across the entire world, definitely in the United States. You would expect them to give really strong Q4 guidance and obviously have a strong Q3 in terms of the holiday season and everything that's been going on. On top of that, you got Nike. Nike has been one of those stocks that has had a variety of different storylines. Number one, the stock fell from like 110 to 70 at the lows. Number two, Bill Ackman stepped in, sold off 4 million shares of Google to buy 16 million shares of Nike. And number three, you got a lot of people wondering, well, wait a second, is the China exposure that Nike has a good thing because China's stimulating, or is it a bad thing because China's economy is in the gutter right now? So those two are going to be very important earnings, and that pretty much sums up the rest of the earnings cycle for 2024. On top of that, and we'll get those results in about 15, 20 minutes, so we'll get into those results. On top of that, we have what happened in the market today. Now, today's a really interesting one. Thank you, everybody, for being here. Welcome to the market close. We got a lot of stuff to talk about in terms of what's going on today. First of all, we had Dan Ives live on the market open today. That was awesome. I'll be clipping the entire about 45-minute show, and I'll be putting that on the YouTube channel for those that didn't get to see it, so that'll be out later today. But Dan Ives talked a lot about tech and the transformational AI revolution that we're in, the bull market, all of that stuff, kind of talking about the concerns people were having yesterday or on August 5th as not being as serious to the long-term thesis of these tech names. And I think most of us agree with him, and I think largely that makes a lot of sense. The problem is today, we saw some weakness, but we didn't see weakness everywhere, and it's really weird kind of how that weakness turned out. So let's go through a couple names. Tesla. Tesla's down 1%. Now, I probably shouldn't even be like even complaining or anything about Tesla being down 1%, but that's not how it was throughout the entire day. Take a look at this V shape. We started off the day in the pre-markets at 456. We got to 420. Some people actually got their orders filled at 420 and 69 cents. It was kind of fun seeing some of those orders get filled. Now we're back at 435. Now remember, the level I was talking about this morning was 427. That was the 3:45 p.m. intraday low from yesterday. If we were to breach that, we could definitely see a little bit more downside. We did breach that from 427 all the way to 420. Now we're back at 434. Bitcoin is definitely taking it on the chin. This one's getting sold off the most. 108,000 all the way down to 100,000 yesterday, now at 96,000. So healthily below 100,000. But we were just at 95,541. Now we're back at 96,900, basically at 97,000. That's a 1,500 point move in the span of basically 10 minutes. So although today has been a little weird in terms of what's been happening, and there's definitely been some red, HIMS was down because of an FDA decision. Take a look at what's up. Grab is green. Apple is green. Google is green. Palantir up 5%. We got that $400 million contract. That is green. Nike so far is green. You have gold that was red during the day. Now gold is green. If we look at some of the other Mag 7 names, Nvidia, nicely green. Tesla's down, but Tesla, was down a lot yesterday, so it actually recovered a lot in the pre-markets. Meta is green. Microsoft's green. Amazon's green. I mean, when you look at the stuff that's green, although it's not recovering as much as it was recovering or as much as it lost yesterday from peak to trough, it's still not bad. I mean, this is not bad at all. Quite frankly, and I think a lot of people will agree with this is really healthy. Going into a Santa Claus rally, being at all-time highs is really hard to keep rallying, but having a nice 5-6% pullback, maybe 10-15% pullback on some of these names that obviously got overextended, I don't think that's a bad thing at all. And the fact that the market's using J-Powell's inability to properly explain why they're doing a rate cut yesterday as the reasoning behind giving this pullback, which to me is just not that big of a reason, then okay, I'll take that level of reasoning in regards to having the market come down any day of the week. And that's way better than some like actual fundamental structural change. And I think that's kind of what we're seeing currently right now in regards to market participants coming back and buying this dip. Now, are there pockets of red? Yes. And those pockets of red definitely suck here and there, but it's not like those pockets of red aren't reasonable to see in terms of why they're happening, given things were overextended. I don't think you have to be buying the dip here, but I don't think it's crazy to buy the dip. Someone who does think buying the dip is not a bad idea is Mr. Tom Lee. In fact, he thinks you should back up the truck and buy the dip. Here's what he's got to say. We'll listen to him, and then we'll keep going from there.
Well, Tom, we'll start with you. I take it you think this is a buying opportunity. This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think the fundamental supporting stocks are intact, and I think it's a good opportunity for investors here.
A good opportunity for investors. Jeff, I take it that you feel is differently putting it too strong?
Well, I don't disagree with Tom on the fundamental side of it, but I think if you look at where we're at, the interest rates, what's on the horizon from taxes, tariffs, and deficits, I really have to be considerate of what happened yesterday. It was the second largest move in the VIX we have seen. And historically speaking, Kelly, Tom is right. A month after that spike in the VIX, you see the S&P 500 higher. However, I don't think we can lean on history here due to the fact that we've seen stretch valuations in the top 10 names of the S&P 500. We've also seen just a straight line up. If you look in the last 2 years, back-to-back years of above 25%, we've become conditioned that the market is just going to continue to move higher, thanks by and large to the Fed dovishness in their $7 trillion balance sheet. So I'm looking, I know Tom wants to back up the truck here. I have the truck running, but I'm not ready to back it up yet. I want to see this more process, reset valuations. I think that's going to be the next couple months, possibly the first quarter, because we've become too conditioned, Kelly, to markets repricing in a day. I have to go back to my 30-year career and understand that we will see reset valuations more of a quarter or two, not just a day or two.
You know, Tom, this has been a bit of a slide for the Dow, to put it mildly. We had 10 down days in a row. You say you saw signs of capitulation yesterday, as it was a 90% down day.
I did, Tyler. As context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday.
So one thing that's important there is that the move we saw on the VIX yesterday, according to Tom Lee, was the 5th largest intraday move on the VIX that we've ever seen in history. And when you look at the historical precedents for those days, one of those was August 5th, a month later, the market recuperates everything it lost. And again, yesterday, it was not an August 5th in terms of, really 10, 15% down. It was 3% down on the index. Some of these names lost 10, 15%, but like these individual names were already overextended. So it didn't really feel as big of a hit as it was on August 5th. 15% down today on the VIX. So you obviously saw volatility come kind of down from there. And Tom Lee's argument is if we just look year to date at the VIX, we spiked up 600% on August 5th. We came all the way back down basically 15 days later. We spiked up 74% yesterday. I don't think it would surprise a lot of people if in the next 12 days or next 5 days, whatever's left of December, we tend to just come back down if there's no other events that would bring volatility higher. Again, if anyone is thinking this is a bull trap, meaning bulls are getting excited for this dip, even though the dip is going to keep dipping, I think the question to ask is like, well, what is the obvious thing that is trapping bulls, or like the not obvious thing that is trapping bulls that we need to try to pay attention to? And if you point to the 10-year, I just think the 10-year is being stubborn because they don't have confirmation on 2 things. For anyone who's concerned about the 10-year, the only reason the 10 years up right now is because no one knows how Trump's policies are going to be inflationary or not, right? There's a perception that some of Trump's policies will be inflationary with tariffs, but we don't fully know, right? The market's going to have to figure that out. Number 2, I think Eric said right here in the chat, Jay Powell said they're going to be data dependent on the cuts next year, but then they're projecting 2 cuts. So it's kind of like, all right, well, if the data is good next year, then why are we only going to get 2 cuts? Well, we're probably not. We're probably going to get more than 2 cuts, especially when you think of all the different ways we can export or import deflation, whether it's from AI and innovation there, or whether it's from China, because China's having a lot of deflationary issues as well. So if we get more rate cuts, this 10-year is going to fall off a cliff. And right now, the 10-year is keeping mortgage rates stubborn. It's making it a little bit competitive with risk assets, right? If you can get 4.5%, that might be a little better than buying into some of these risk names, although I still think Google is a better buy than the 10-year. But That is the reason why we saw some of the pain yesterday. I don't know if that's a bull trap. I think that's just a logical reason why we're getting a little bit of a pullback off an already overextended market, not necessarily, oh my gosh, things are crashing because this 10-year is going higher. And so from that perspective, it's why we're kind of seeing the market green. I mean, again, let's look at some of these stocks. We got 5 minutes into the close, then we got Nike and Fedex here. Crypto is the one that's really getting hit. If you look at crypto right here, Robinhood as well, recovering right here. Robinhood bottomed at 36.21. Now it's at 36.91, down about 0.5%. But outside of Robinhood, and again, this is why I like Robinhood, because it's affected by crypto, but not like damaged by crypto to the extent that some of these other names are. Marathon down 6%, Riot down 6%, CleanSpark down 4%, Coinbase down 2%, Bitcoin again down about 4%, MSTR down 6.3%, 327. BitX down 8%. Like all these names are just getting hit because Bitcoin's tanking below 100,000. But outside of the crypto names, Mag 7 is fine. Quantum is in a little bit of an issue today, but Quantum, it had run up a lot. So you got QUBT down 40%, QBTS down 29%, Rigidity down 29%. But outside of Quantum and crypto, I mean, it's not too bad. Even the semis are red, but they're not as red as the crypto names. Like TSM's down 0.33%. Okay, that's not as bad as CleanSpark being down 5%, right? So AMD, this one's not finding a bottom yet. It's down 2%. We did have Dan Ives say that he thinks AMD is massively oversold right here at 118. But you got some of these names that are trying to find their bottom, and they're not just collapsing like some of the other names that are tied to things that are more volatile like Bitcoin. Outside of that, even Tesla had a really rough day going from 450 to 420. Now it's back at 437. You would think that nothing even happened today, given the way that Tesla's closing. And Palantir had a great day. SoFi, a little bit of a rough day, down about 1.4%. But outside of that, it's just not that insane from what we saw yesterday. And maybe tomorrow is going to be really the deciding factor, because obviously we have triple witching. We talked about that as well. You guys are mentioning that in the comments. Palantir is holding well in the 70s, which is just remarkable strength for Palantir. But which also makes you think, is the valuation that crazy? Because everyone's telling me it's the biggest bubble ever. But when things are supposed to come crashing down, Palantir is just chilling at $70. It's one of those things where it's like, I think the street has definitively accepted that it's okay for Palantir to be trading at these multiples, because you would think the first thing that gets cut is something trading at 60 times price to sales, but no, Palantir's sitting there. So triple witching tomorrow is going to be really important, because you have all these options that are expiring. One stat on this that's also really important. This is the S&P 500 put to call ratio. I mean, take a look at this, dude. There are 3.4 million puts on the S&P 500 tomorrow that are expiring, 1.5 million calls that are open. You've got double the amount of calls in puts, total open interest, 5 million, that are expiring tomorrow. Tomorrow is going to be crazy, and I don't think anyone knows what's going to happen tomorrow, but there's going to be tons and tons of high-frequency trading algorithms just doing their thing, going in different directions. And that could also be the reason why we saw a little bit of volatility using JPOW as the scapegoat yesterday, and why it's kind of following in through today, even though the majority of the market has not really been that volatile outside of Tesla and Bitcoin. And even Tesla is recovering towards the end of the day. So that's what we got right now. And I think it's actually not that crazy of a market that we're in. I think we're ending out December. I think the bull market is still pretty much intact, just based on the data that I'm seeing. And the final thing now is just going to be how the market ends out the sort of final week of 2024. Here's the last thing Tom Lee had to say, and then we'll get into the market close.
And wonder if it's worth sticking around.
Yeah, I mean, I'd say investors are tired of having like the rug pull on small caps. Yesterday's an example. Unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear, stocks that aren't as liquid get hit harder. That's why the Russell not only has been sort of under pressure for a couple of weeks, but really got hit yesterday. But do we think anything has undermined what makes small caps attractive the next 5 years? It's still in place. I mean, they've underperformed the last 10 years by the second largest magnitude in the last 125 years, except for 1998. So not only are they derated, but now we have a roadmap of deregulation, possible mergers, at a time when financials, which is a huge weight in small caps, look more promising, and things like biotech, which is a huge weight, also look more promising with deal activity. So I actually think this is, again, another chance to buy a dip.
So you got Tom Lee that is still bullish financials. Here we go, folks. 4 p.m. Thursday, December 19th. Get ready for the muted bell. The stock market is now closed. All right. Markets are closed. Tom Lee still bullish financials and small caps. Oh, we got to move on FedEx. You guys saw that, right? Yep, we got to move on FedEx. FedEx and Nike. FedEx and Nike. Here we go. FedEx and Nike. Dude, the Temu bell. The Temu bell is wild, bro. FedEx and Nike. All right, FedEx is up. It's up and then it went away, but it's still up. It was up like 2%. No, it's still there. It's still there too. Wow, that's a big move on FedEx as soon as the bell, as soon as the Temu bell rings. FedEx right there, up 0.78%. We did hit 2%. Now it's flat. It was at 280 from 275. Let's see if I can get those numbers real quick if those are out immediately. And then we got Nike as well. Nike's going to be the big one. There's a lot of people that have a lot of thoughts on Nike. Oh, I got to do the poll. And now FedEx is slightly red. I'm going to do the Nike poll because I think Nike numbers take a little bit. So let's do the Nike poll real quick. Nike pump or dump. Let's see what you guys think. Get FedEx numbers soon. Also, let me know who's in these two names, Nike or FedEx. Nike pump or dump poll is live. Let's see what you guys have to say. We got FedEx being flat right now. It was up 2%. Now it's flat. Nike's basically flat after hours, up just a little bit. FedEx is now red. Nike is now flat. No numbers yet. It might be at like 405, so we have to maybe give it a couple minutes. But let's see what we can get. Yeah, FedEx is not out yet. Now, what does the street want from FedEx? FedEx, the street wants $22.1 billion and 3.91 in EPS. So 391 EPS, 22.1 billion. Last quarter, they missed on both metrics, I believe. Nike, the street wants 12.13 billion and 64 cents of EPS. So those are the expectations that the street is looking for on these names. Oh, we're green on FedEx. We're green. We're green. 7%. No, now we're red. No, now we're green. We're still green. It went away really quick. Then it came right back. 9%. Holy moly. FedEx is getting bought up. This is a big move on FedEx. FedEx usually doesn't have these types of moves. Look at that green candle. FedEx right here, up 9%. It doesn't look like a head fake yet. It's maintaining above 9. I wouldn't trust it yet, but it's still holding. The bots are trading it right now. Yeah, the bots could be trading it right here. But we do have FedEx up 9%. Poll 54. So it's basically 50-50. 54% say dump, 46% say pump on Nike. Honestly, I have no clue. I know Dumb Money, Chris Camillo, he's I think short Nike, if I'm not wrong. You guys can correct me, but he's definitely bearish Nike. I have no idea, dude. I really have no idea on Nike. The fundamental thesis around their brand is in question, but also it's oversold a ton. Like, I don't know. We'll see. Bill Ackman's definitely in this one, so he's got a decent amount of money riding on this one tonight as well. FedEx announces intent to separate FedEx Freight, creating two industry-leading public companies. Holy crap, that is a big deal. FedEx is doing what Lena Khan wanted Google to do. They're splitting up. FedEx is splitting up. That is a big deal. Let's see if we can pull that up. That is definitely a big deal for FedEx right there. Now it's down a little bit from that 10%. Now it's up 7%, but let me see if I can get that news. Okay, so here are the numbers first. Here are the numbers, then we'll try to get to that news. That is weird though, right? They're splitting up the company here, but the street kind of likes it. They missed on revenue, beat on EPS. Beat was nice on EPS. That's a 12-cent beat. 405 minus 393 is 12 cents. Quick maths, baby. So there you go. That we got a 12-cent beat. But then revenue 22.0 versus 22.09. That is a very insignificant miss on revenue. So it makes sense that the street's not reacting to that miss. But on the EPS beat, that is important. Let's see if we can get this news on FedEx. They're splitting up the company. They're only a $70 billion company. It's not like the biggest company in the world. So that is interesting. FedEx has just announced it's decided to pursue a full separation of FedEx Freight through the capital markets, creating a new publicly traded company. So FedEx Freight, which is going to be doing different types of deliveries from General FedEx, will become a new company under a new ticker symbol, essentially. And it looks like that's what the street is excited about. Interesting. Loop for a while says FedEx is a sinking ship. To be honest, I worked there for 5 years. FedEx year to date stock on FedEx. Basically, it's up 20% now with a 10% move after hours, but it was up 9% going into this. Over the past 5 years, it's up 86%. 1 year, it's down 1%. In past 6 months, it's up about 9%. I don't know how I feel about this. I don't know how I feel about them splitting up. I guess that's bullish. The street definitely thinks it's bullish. Nike, we don't have numbers yet, but Nike's up a little bit after hours. But I don't know. I guess they think there's better opportunities by splitting up the business, diversifying kind of the way they communicate to investors around the different parts of their business. And I guess they're going to be unlocking different shareholder value. When this happens, I imagine like if Google were to split up into YouTube, Android, Chrome, everyone would get a certain share of those new publicly traded companies if you owned one share of Google stock. So I imagine if you own FedEx, you're going to be getting a separate share of FedEx Freight. That is happening right now. So that's what we got in the context of FedEx. Loop says they're getting eaten up by Amazon, just operational efficiencies keeping it alive. Yeah, that's fair. I mean, Amazon's, their vertical integration is just incredible. And so you would imagine a lot of shipping also is happening through Amazon, especially during these times of the year. Then that's business that FedEx and UPS just aren't getting as much of. Tesla's up a little bit after hours. Nike, we have up 0.52%. Let me see if the Nike numbers are out at all. And if we're just getting a muted reaction or no reaction. No Nike numbers. No Nike numbers yet. FedEx Freight was never profitable. Well, if that's the case, they might be wanting to get a separate company that has its own issues with profitability versus messing up the actual FedEx business on EPS estimates. Because if they can get rid of FedEx Freight and massively increase their earnings per share, that also might be something that they are looking into. Still 50-50 on the pump or dump hole for Nike. So you guys are definitely not swinging in one direction right here. Let's see if we can get some coverage on FedEx, and then we'll get into Nike. And then we'll see what we've got going on here. Yeah, we got the FedEx news. All right, here we go. Let's pull this up. And let's see what we've got for FedEx. All right, here we go. Here's FedEx.
Well, hey there, John. Miss on the top line, but a beat on the bottom line. The estimate for EPS was $3.91, came in at $4.05. But the real story is that FedEx has confirmed, it was long speculated, they will spin off their less than truckload trucking business, FedEx Freight. The idea here is to unlock shareholder value. We're just talking about this on Closing Bell a short time ago. FedEx overall as a company trades at about 12 times forward earnings, and that includes its freight business, again, an LTL trucking business with about $9 billion in annual revenues. If you look at their peers, names like Old Dominion and also XPO, they move less freight and trade at a significantly higher multiple, both in the 30s. So really, this is about unlocking shareholder value. In a release, CEO Raj Subramanian says this process will take about 18 months. It's going to be executed over the next 18 months. He goes on to talk about the fact that he believes that they're going to be able to continue, even with the separation, the spinoff into a separate company, the cooperation between FedEx Freight and also their ground and their express business. Earlier this year, they combined the ground and express business into one unit, combining it, kind of breaking decades of tradition and FedEx keeping them separate. Now he's saying that along with this spin, that they're going to still be able to cooperate. That was one question from a lot of investors and analysts, whether or not FedEx Freight and the other part of FedEx, the remaining part of FedEx, if you will continue to work together. FedEx often wins business by bundling their trucking services along with other freight services through ground and express. They're able to win business, but they also charge less than many of the other peers, both on the e-commerce side and also on the LTL side, the trucking side. So again, shares of FedEx moving double digits higher, miss on the top line, a beat on the bottom line. But the real news here is that FedEx will officially spin off its freight division. That process.
All right, so I guess the street likes it. Where's Nike? Do we have a move on Nike yet? Nike, no move yet. It's barely moving after hours. I think either 4:15 we're going to get a move or 4:10, so in like 1 minute. So we should get Nike pretty soon. This one, a very controversial name. This one actually has a lot of attention on Twitter. If you search Nike, there's like thousands and thousands of posts of people that are either bullish or bearish on it. So this one definitely is a big name that people think about. Nike did not report yet. We are waiting for Nike. I think in like a minute, maybe 4:10, we should get the results. Tesla is up about 1% after hours, 0.5% right now. Not bad. Robinhood's up a little bit after hours. MicroStrategy's up 0.33%. SPY ended the day slightly green, 586.002. I mean, down 0.02%, but nothing too crazy. HIMS ended the day down 8%, and then Nubank ended the day down about 0.5% as well. FedEx still up 11% currently right now. Yeah, China is going to be a big thing for Nike. There's going to be a really, really big piece on Nike, what they say about China, how that's affecting the business. I don't know. I kind of feel like analyst expectations are a little off on Nike in terms of just like they're not expecting that great of a quarter. So if Nike can do anything positive here, we might get a little bit of movement to the upside. SoFi is moving up after hours as well. We got a lot of stocks moving up after hours, actually, even if they were red during the day. Netflix is here. It ended the day up about 1.4%. Enphase was down 4% of the day. I don't know why Enphase was down, but that was down 4%. AMD again was down about 2% of the day. MSTX, leverage MicroStrategy. This one got hit today, down 13%. And then Adobe right here was down another 1% as well. Oh, FedEx right here, 9.6. Nike, nope, no numbers on Nike yet. No numbers on Nike yet. Nike earnings in 50 minutes. No, it's not going to be at 5 p.m. The call will probably be at 5 p.m. I don't think Nike does their numbers at 5 p.m. I don't think anyone does that. I would imagine not. I think probably 4:15 is where we get Nike. Yeah, earnings calls at 5. Earnings call is definitely at 5. Let me go to their website. Do we have numbers on their website? Let's see. Nike 1:15. Okay, perfect. So we got 4 minutes. 4 minutes. 4 minutes until we get the Nike numbers. Here we go. I don't know about Nike, dude. I have no clue. This is going to be an exciting one. I have no position in Nike, but we're going to see what happens. All right, money market funds. Let me go to the page. I have not checked it all day. I'm going to refresh. I think it's updated because it's after 4 p.m. Here we go. I'm going to press refresh. This was last week. Money market funds decreased by 451 million. Here's the refresh. Let's see if we got an update. Let's go. This is what we've been waiting for. A decrease of 19.6 billion on money market funds. And you know what? I really think yesterday that market dip made people sell off those money market funds and put some money in the stock market. I think that's what happened. I can't prove it, but I think that's the case. 19 billion to go from 450 million to 19 billion is a hell of a decrease in money market funds. We want to see money leave those funds and go into the markets. Now, I don't know if old 19 billion went into the markets, but 19 billion leaving money market funds definitely means that money is being put to use somewhere. And the markets, crypto markets, real estate, whatever it is, it's probably being in more productive spaces outside of money market funds. Also, we had a rate cut, so those money market fund returns are not as good as they were literally 3 days ago. So you could imagine that people felt incentivized to take some money outside of those funds, which is not too bad. Not too bad at all. 19 billion. Look, it would be a little bit more alarming to me if that was 19 billion going into money market funds. Not because it's bad for people to have money in those funds, but just because it's a little like, okay, so where are people getting this money from, right? If you're going to put 20 billion into something safe, are you taking it out of something risky, right? And is that explaining some of the market sell-off we saw yesterday? Or are you taking something out of something safe and putting it into something risky because the safe thing feels risky because it's just not yielding as much as the risky thing could yield you, making the risky thing actually a little bit more safe. So I think that's kind of what we're seeing right now. What does money market funds mean? Money market funds are essentially these instruments, financial instruments, where you can get a risk-free return. These money market funds kind of put their money into a host of different instruments, 10 years, bonds, etc. And think of it as a high-yield savings account, sometimes giving you a better yield than a high-yield savings account. And $6.7 trillion are in these. Now, only about $2.5 trillion of those are from retail investors, people that have, individual wealth, people that have made some money in life and they're just protecting that money there, people that have, Schwab and Fidelity accounts that are buying up money market funds. About $4 trillion of it is probably always going to be there like it has been since 2013 or since 2010, to be honest. But there's a good couple $100 billion that could leave over the coming year as rates continue to come down. Bonds, mutual funds, all that stuff. Yep. All of that stuff. All right. We got about 1 minute, folks. We got 1 minute on Nike. 1 minute on Nike. It is time in this next 60 seconds. We're going to see. What's the results on the poll? I still think it's 50-50. It is still 50-50. Is it? Yeah, literally, dude. It's literally 50-50. It's literally all right. So this is completely divided right here. We're going to see. We are going to see. We got about 15 seconds left. And then Bill Ackman's, dude, what do you think Bill Ackman's doing right now, right? Bill Ackman has a lot of money inside of this. I mean, just to do some rough math real quick, 16 million times 77. Yeah, dude has a $1.2 billion just sitting there. Oh, we're up. We're green. We're green. We're green so far. We're green. I don't know if it's a head fake. We're green. 7%. 7.8, 7.6, 7.74, 8.2, 8.3, 7.74, 8.35, 8.9, 9.2, 8.65, 9.7% on Nike. It's holding. Oh, Bill Ackman's smiling right now. Bill Ackman has to be smiling right now. 8.3% we are holding on Nike. We are holding. Nike's green. Somehow the pump just went to 51% and the dump went to 49%. I wonder how it just oddly shifted after we see the Nike results. Somehow it just always happens like that. 9.58% on Nike. Let's see if we can get these results. We got to beat. Nike beat it, and their name is not Michael Jackson. EPS of 78 cents, beating expectations of 64 cents. That's not bad. If we do some quick maths, that's 14 cents of a beat. Not bad. Revenue, 12.4 billion versus 12.13 billion. That is also a pretty nice beat. They got a beat on the top and the bottom. The street's okay with it. The street is liking it. And you got Nike going green. Again, expectations for Nike, given it was down 30% year to date, probably weren't the best. So they just needed anything good. In this case, a double beat. FedEx right here still up 10%. And that is why you're getting Nike to get a little bit of love right here from the market. 9.6%. Bill Ackman is up like a couple $100 million. Dude, that must be so cool. Imagine he's looking at his Schwab. What do these hedge fund managers use? Like, it has to be some website none of us know about, right? To trade stocks. And they're just like looking at the number, just go straight up. Because it's different when you see a number go up like 5,000, 10,000. Dude, he's probably saying $150 million just like created. That's kind of cool, dude. Only in the stock market. And in Fartcoin, obviously. 9.34% on Nike. Let's see if we can get some coverage on it and get some analysis from their earnings. Let's see if they have the website up and they have the results. We got to see what's going on with Nike. Oh, we got it right here. All right, here we go. Right on to Nike. Let's see what we got.
Out there right as you were getting to Mr. Nagel. So let me get him to you here. The Nike earnings per share coming in at 78 cents. The street was looking for 63 cents. So better than expected by 15 cents. Revenues also slightly ahead of estimates at 12.35 billion. The street was looking for 12.13. Still down though about 8% for those revenues year over year. Second quarter gross margin for Nike also above expectations at 43.6%. The street was looking for 43.3. Remember, that's important because we anticipated a lot of elevated promotions in the quarter to clear through some of that merchandise. And the company had warned us that they had not been seeing great traction in their stores and websites. So that's better than expected. Second quarter EBIT margin, 11.3%. The street was also looking for 9.3%. So far here, a much better than expected report. As Brian was saying, we expect to hear from new CEO Elliott Hill on the call. The street really wants to hear about his expectations and strategy going forward. That's where largely the focus will be. We usually get an earnings guidance or forecast on that call. Remains to be seen if we'll do that today because of the new CEO and a potential new strategy, but we'll bring it to you and comb through the details here while you're having the conversation. Pop back on with anything relevant. Back over to you.
All right, Courtney, thanks. Brian, now that we have the numbers, to me, mildly educated, the gross margins at 43.6%, a little bit better than expected, or maybe the most encouraging thing.
No, definitely. Look at it. I think Courtney did a great rundown here. I mean, because I'm listening to these numbers and starting to look at them here on my screen. Look, this is very much better than feared. Okay, so I think that's a big positive. And like you're saying, John, the gross margin, Nike had cautioned that gross margin could be weak with some promotions. It seems like they were probably overly conservative there. Again, a sign of a smart company. But I definitely, these results were definitely better than feared. I think that's why we're seeing the stock pop so nicely here in the aftermarket.
And it looks like Nike Direct, $5 billion, down 13%. Wholesale, $6.9 billion, down 3%. What do you need to hear from Elliott Hill on the call, and then perhaps whenever we get this rescheduled investor meeting in terms of strategy as they do discount to clear out inventory, as the product pipeline is in need of refreshing, all of these things we've been talking about for a number of quarters now?
Yeah, so look, what we want to hear is a path towards better product innovation. Okay, so and to be fair,
this is going to be the first earnings call for the new CEO as well.
With Nike's been talking about better product innovation and better consumer reception to some of the new products they've introduced recently. So we've already started to have this conversation. I think it would be great to hear it from Elliott. And I think that will be a positive. Now they're probably going to give some guidance, just like Courtney said in her remarks. Nike typically waits for the conference call to give guidance. Last time they indicate they're no longer giving annual guidance, but I think they're going to guide for Q3. On the heels of these numbers, guidance for Q3 is probably decent. So I don't think there's much risk there, but again, that'll be something to listen for. And then how they're, what they're hearing from their wholesale partners. I mean, this is a big stretch and a big shift back for Nike. Start working with some of these key retail partners. I mean, does Elliott have some initial insights into how that's working? But again, the real key here is product innovation and how consumers are reacting to the new products that Nike is introducing.
Stock's up 10% right now. Do you buy here?
Absolutely. I mean, I think Nike's cheap. Now, I want to make sure I'm clear. I mean, I'm looking at Nike over the next 12 months. I was saying to our clients and my colleagues here at Oppenheimer just over the last couple of days, I really think Nike could be one of the most interesting mega cap stocks for 2025, because I think that's the year you're really going to see this turnaround start to take shape. And at these levels, this stock is cheap.
Okay, Brian Nagel, thank you.
Thank you.
We've got breaking news.
Wait, what's the breaking news? Hold on.
Out of Washington on the government funding bill.
Okay, well, we'll get to the funding thing in a second. So Nike's up. Bill Ackman's up basically $150 million right now. He has exactly, let me give you guys the exact number. He has 16,280,338 shares of Nike. So Ackman, this is his portfolio for those that don't follow up his portfolio. Paul says, I'm loving my December 2025 8750 calls right now. Those are probably printing. Right now. Heavily concentrated. Again, he added 435% to his position on Nike last quarter. Now, this might not be accurate. Maybe he sold since then, but if we just assume, that's relatively the same. 16 million shares of Nike, about 10 million shares of Google. He has more Nike than Google. Google is a heavier weighting because Google is more. Google's 90 per share. Nike's 88, but still, you got Hilton at 7 million shares, Chipotle 28 million shares, and then he has restaurant brands Brookfield and CPKC. So Nike and Google, some of the big names in his portfolio. He sold off some Google to buy some Nike, and it looks like that bet so far is working well. His reported price is 88.40. Yeah, I don't think that's correct. I think Data Roma has that wrong. Bill Ackman, I don't believe. And I could be wrong, but because I remember a month ago or 2 months ago when the data came out, it said his reported price was 72.70 or something, or 78 or 74.50. It was like in that early 70 ranges. So I don't know. He could be down if his average is 88, but he's still up the 150 million that he got today, even if he's still down on the total position. Overall, it looks like he thinks this thing could go back into the high 100s. If we look at a year-to-date chart on Nike, it topped out. Where did it top out on Nike? Nike was at 121. Now it's at 84. And if we go back 5 years, it was at 171. So if Bill Ackman could ride this thing back to maybe 115, 120, I think he would be pretty happy. And if we can get anything above that, that also would be bullish as well. Google outperformed Nike since he bought. Yeah, Google has still outperformed Nike. I think he's doing this as a recovery play. He also gets a dividend from Nike, so that's probably another reason he might be into this one. And I think he had an active hand in switching management because the new CEO, I kind of think was handpicked by Ackman. So besides that, Nike's doing well. Nike is doing well. It is not doing bad. As Christian says right here, he is an activist for a reason. That is correct. In terms of Nike's actual website, let me see if I can pull up the real results. Yeah, here we go. All right, so let's get some more data on what happened with Nike. They beat on the top and the bottom, but here's some more data. Direct revenues were $5 billion, down about 13%. Second quarter revenues were $12.4 billion, down 8%. So although they're not growing, the street's okay because they already sold it off the majority of the year, and they're willing to take it higher right here. Their gross margins decreased again to 43.6%. This is what the questions in the earnings call are likely going to be about. How do they increase revenue growth to get at least to 1 or 2%? And then how do they stop the gross margin decline that they're currently seeing right now? Elliott Hill, the new CEO, says, after an energizing 60 days of being back with my Nike teammates, our clear priority is to return sport to the center of everything we do. We're taking our immediate action to reposition our business so we can get back to driving long-term shareholder value. Our team is ready to go, and I'm confident you will see more moments of Nike being Nike again. The fact that he's saying our clear priority is to return sport to the center of everything we do maybe is a little bit of shade to the previous regime that brought a lot of politics into Nike. I mean, whether you agree with it or not, Nike did get a bit more political over the past couple of years. And if that's the case, maybe we're getting into a new trajectory for Nike as a business. Executive VP of Nike says, Nike's second quarter financial performance largely met our expectations as we continue to make progress in shifting our portfolio. Under Elliott's leadership, we are accelerating our pace and reigniting brand momentum through sport. That's another mention of reigniting momentum in the business through sport. I think that is pretty obvious that they are trying to say, hey, read between the lines. We're not going to be political anymore. I kind of think that's what they're saying, dude. I mean, if those are the first two quotes in the press release, I think they're trying to get investors to realize that they're going back to sports, not going to politics. And that's how they're going to change this business. Inventory still at 8 billion. That's flat year over year. That's not too bad. They have about 9.8 billion in cash. That's also really good. Dividends of 557 million. They bought back 1.1 billion worth of shares. So about 13.1 million worth of shares, along with 557 million of dividends. So they returned about 1.6 billion to shareholders in the past quarter. There you go. Amit, do you know how Nike is in Fortnite now? Nike has been in Fortnite for a while, right? Is that a new thing? I feel like Nike's been incorporated into video games for a while, but if they're in Fortnite, look, that's cool. I mean, more collaborations with them, which is not bad. Is this a Victoria's Secret moment? I mean, I don't know enough about Nike's business. I'm going to have to listen to the call, go through it. Nike right here up 8% right now. But you got to turn around at some point, right? They got a new CEO. They keep mentioning they're going to be focused on the business through sport. They haven't cut the dividend, which is awesome. Gross margins are declining, but if they can give you an answer for why they're gonna have a path to, I mean, the market's betting on potential. If Nike can say, "Hey guys, it's been a crappy couple years, but here's the future, here's the vision, here's the dream you should be investing in," where gross margins go up, revenue growth goes up, the dividend potentially has a chance to go up, share buybacks go up. I mean, if they can, as China headwinds go down, you can believe in that vision, then maybe this is a little bit of a turnaround, like Victoria's Secret as well. Will you listen to the call here? No, we're not going to be listening to the call, guys. If you want to listen to it, you can go on the website. So we're not going to be listening to the call, but Nike right here is up 8.5% currently right now. Okay, let's get an update. So we'll keep going through Nike and Fedex, but let's get an update on that government shutdown thing, because that's another reason the markets, I think, rallied a little bit into the close. Republicans look like they have a deal ready to go so that the government won't be shut down.
And Emily Wilkins has a story for us. Emily.
Hey, Morgan. Well, yes, we now have the text of an agreement to the government spending bill, and it does include extending the current debt ceiling. It was going to be expiring in January of 2025. This piece of legislation would extend it for another 2 years into January of 2027. That takes a huge lift off the shoulders for Republicans next year, who are looking at a difficult battle to reauthorize it. Also just gives a little bit more breathing room, not having to worry about that fiscal cliff for a little bit longer. You've also now seen President-elect Donald Trump come out and endorse this legislation. He said in a piece on Truth Social that this is a very important piece, vital to the American First agenda, was added as well. The date of the very unnecessary debt ceiling will be pushed out 2 years. Now we can make America great again very quickly, which is what the people gave us a mandate to accomplish. He further says that all Republicans, even Democrats, should do what is best for our country and vote yes on this bill tonight. We are expecting to see floor action a little bit later this evening. The big question now is exactly how they're going to be able to move this forward, because there are many questions about whether or not Democrats are going to be on board to help them. Remember, of course, Republicans have a very narrow majority. You already have a few of them who are concerned about this debt limit increase. They wanted to have that be a separate negotiation. And then, of course, there's the Senate and what they are going to be able to do. So still a lot of twists and turns. We are, of course, under the 36-hour mark to get this done before a government shutdown, and we will be following this every step of the way. But at this point, they have a plan B. It's very slimmed down. We went from about 1,500 pages to 116 pages. Certain things don't seem to be included in the bill, including that ban on American investments in different Chinese infrastructure. Pieces on AI have been taken out. Pieces on blockchain, on supply chains have all been taken out. There still is disaster relief, though, that is in the bill. That was one of the biggest spending items. And of course, you heard Elon Musk raise concerns about spending, but you did see Trump come in and say that this was an important component to have. And it seems that it has made it through the cuts. And now, of course, it's just a matter of a race against the clock. Morgan?
That raise for lawmakers still there?
The lawmakers, yes, everyone's still here. Everyone's waiting. And this could go potentially very late into the night. The raise is out. My bad.
Okay.
The raise is out of the bill. And that was obviously one of the most controversial pieces.
Yeah. Emily Wilkins, great reporting this afternoon. Thanks.
All right. So, lot of nuance to what they just said, but the key takeaway for all of us, at least for now, eventually we're going to have to deal with that nuance more in the future, is that we're not going to get a shutdown, which is good. That's hopefully good. Did that affect Bitcoin? Let's take a look at Bitcoin. Nike still holding 7%. Not horrible. It's holding 7%, at least for now. It was up 10%, but it's holding 7%. Bitcoin's up a little bit. You got a green candle from 95.5 to 97.4. That's not bad. Ackman already donated to Trump. Yeah, that's true. That's another thing, dude. I mean, Nike, you guys are asking about tariffs. I mean, I would imagine just off the top of my head, yes, Nike will be affected by tariffs because it's Nike and they're not, Apple that is getting a special treatment. But Bill Ackman likes Trump. Trump likes Bill Ackman. Bill Ackman has a significant stake in Nike. Maybe he can have some conversation with Trump to get Nike out of that. And that potentially could be a way that Nike doesn't have to deal with too much of the tariffs. Again, that's still a big unknown for the entire market in terms of what tariffs are going to be like. But certain companies, we had Dan Ives today say that he thinks Nvidia, Apple, and Tesla are not going to feel the brunt of those at all. So now it's a question of if the other companies feel the brunt of that either. 97,300 right here on Bitcoin, down about 3.36%, but it's up a little bit from 95,000. Meta right here at 595. FedEx giving up some of its gains. It was up 12%. Now it's up 7.6%. Nike's still up 8%, even though it was up 11% just a little bit. Oh, the fear index. This is another good point. For those that are just joining, first of all, for those that are just joining money market funds, take a look at this. They're down by about 20 billion, which is not bad. Some of that money hopefully came into the equity markets and bought up the dip. And you can imagine a decent amount of that actually happened. And then fear and greed index, dude, we are almost at extreme fear. Oh no, there we are. We were at fear 20 minutes ago. Now we're at extreme fear. Look, I mean, one of the easiest ways to figure out when is the time to buy, or at least not sell, is the fear and greed index. It's honestly pretty accurate. Like, it's one of the most simple metrics to look at the markets, but you could spend you could have two economic PhDs try to tell you about the markets, and then you could just look at the fear and greed and be like, oh, at greed, I'll take some profits. At extreme greed, I'm taking a lot of profits. At fear, I'm going to buy. At extreme fear, I'm really going to buy. And that's it. So I think we got a little bit of a reset. I think we got a little bit of a reset, as Cactus Jack says right here. And that reset got us back down to extreme fear. A lot of money on the sidelines. That money can potentially come in. You got Bitcoin below 100,000. Some people thinking this is their dip opportunity to get into some Bitcoin before we get a strategic Bitcoin reserve, which is still a thing that I think has a better than 50% chance of happening. And if that's the case, you might have some buyers that currently step in. We are at pre-election levels. Yeah, the market's not at pre-election levels, but fear and greed index is at that pre-election level. And, that pre-election was a great time to buy right before we got into Trump getting in. Loop says, my theory is people are buying puts to hedge retirement accounts for retirees of 2024. The puts cause VIX spikes and fear and greed index to shift to fear. That's a fair argument. I mean, you do have a lot of people that have a lot of gains this year, and they are happy giving away some of the premium from those gains just to be able to hedge and protect the position. So yeah, that is a fair thesis. It's just a question if new money comes into this and takes advantage of these opportunities. A couple of headlines I want to show you guys. So first of all, this is the cumulative inflows of Bitcoin ETFs, since we're talking about Bitcoin right here, since November 27th. This is the daily total net inflow. Every single day since November 27th has been green, to the tune of at least 100 million, averaging closer to 400 million a day going into Bitcoin. So, and this is through the Bitcoin ETFs. So, I mean, from that perspective, you are definitely seeing people get into Bitcoin. And we'll see today and yesterday were one of the biggest red days we've had basically all month. And we'll see if people bought the dip on Bitcoin and they continue to come in. Here's another headline that I'm looking at. Gen Z's credit card debt has rose 49% since 2023. I know a lot of you guys, every time we talk about the consumer, the health of the consumer, and the retail sales data we got on Tuesday, which was way better than expected, the common answer is, wait a second, a lot of this is on credit cards. That's fair. And, this is kind of proving my generation has taken on a lot of credit card debt since 2023. The question is everyone, are we going to be able to pay all this back? And so far, although there have been delinquencies, a lot of delinquencies and defaults have peaked in a lot of different areas. I mean, if you look at SoFi's numbers, and SoFi is not only Gen Z in terms of their demographics, but by March, their delinquencies and defaults peaked, which was another reason at $7, SoFi was really exciting, because the risk that there would be so many defaults, especially as we lower rates when, it gets easier to finance a lot of the stuff, was a bit minimal. So also total household net worth has gone up, and that is, you have to compare that as a percentage to the debt that people have. Now, in the context of Gen Z, household net worth is more for the boomers and Gen X. My generation, I don't necessarily know if they're participating as much unless they're invested, right? In the broader household wealth going up to about 170 trillion in the United States. But that is something that could hedge back against the debt that Gen Z is facing as well. And that is important. By the way, I didn't ask this question, and then I want to look at something that's a little bit more of a bearish thesis, because we got to look at some of the bear arguments as well. Who bought the dip today? Who bought the dip? I was going to ask that in the beginning, but I forgot. Who actually bought the dip today? I bought Grab. I bought more Grab today. I think I bought like 100 shares, so I bought some more Grab, but that's pretty much it. I think I had 491. I bought some more Grab. And that's it. Martin Shkreli seems to now have closed his Bitcoin short, but still holding the MicroStrategy short. Yes, MicroStrategy, or Martin Shkreli, said that today that he's still short MSTR, which, by the way, his MSTR short has been working really well. I mean, the sucker is down. It's up a little bit after hours, but it was down 7% today, and it's down like 15% this week. So if he were to close it, he would be closing it profitably, but I think he's going to hold that one and continue to go long on Bitcoin. Again, when I was on the spaces with him the other day, he likes crypto. He just thinks Sailor's levering up like crazy right now. We got a lot of you buying the dip right here. A lot of you buying the dip. So we got David Tobin bought Hood in Google. Albert bought some more MicroStrategy MSTX. I think you'll be fine, dude. I think MicroStrategy will be okay, but that one is just very leveraged. So you gotta be wary of that. But again, you can sell covered calls against it. The covered call premiums are amazing. That can help you on these downturns. There are still call buyers that are willing to buy up some of those calls on MSTX. We got HIMS. Michael bought HIMS. NYC Urbanista added to quantum plays. Today was definitely a down day for those quantum plays. So if you're interested in those stocks, this was definitely a dip day. Scott bought Nubank. Jody bought Micron. We're going to look at Micron a little bit as well. Ashok bought Hood. A lot of you guys bought some Grab, Amazon. Ali bought CleanSpark options. What else do we have? Shane bought 500 of Grab, 50 of Hood, 9 of Okta, and 150 of Next. Okay. iBit. Is Nike pumping? Are we still getting a pump on Nike? Are we going green? Wow, yeah, Nike. Well, Nike's still holding 8%. I mean, look, that's better than going back down to 5%. It was about to get there for a second. FedEx is actually trending downwards. FedEx was at 12%, still at 7%. But Nike's holding 8%. Nike is holding 8%, which is not bad. Who bought AMD? Who bought AMD? Because this one, again, dude, I don't know. I don't know if it's going to find its bottom or not anytime soon. I agree with Jason, who was on Technical Tuesday the other day. There's just no catalyst for AMD right now. Even Chris said that this morning. There's no catalyst. Is it oversold in my opinion? Yeah, it's definitely oversold. But the actual narrative kind of sucks. And Lisa Su being the Time CEO of the year, that's not really helping the narrative. So I think the narrative is going to be earnings, and they just have to have a good earnings. But if sentiment is this bad on AMD, I would imagine any level of a beat on earnings would be bullish for them. NYC Urbanista added AMD. Hugo added AMD. Jake AMD at 132. That's okay. This is the price discovery of finding a bottom, and hopefully in this 115, 120 range, it'll find its bottom. All right, decent amount of you bought AMD. Yeah, a decent amount of you bought AMD. SoFi as well. Yeah, some of you guys are saying SoFi. SoFi, I mean, not bad today. SoFi was down 1.3%, almost went below 15. I think it hit 14.98 for like a second, but back above 15. It is holding 15 really well, dude. SoFi is having some really strong, just support at these ranges or at these levels. And once that becomes 1650 to 17, and then it slowly makes its way into 20 and can hold 18, 19 as support, that's going to be exciting for SoFi. So next earnings is going to be very, very important for SoFi as well. Where was Grindr? I didn't check on Grindr during the day. Grindr was green, 1.26%, $17 after hours. Grindr has been the one stock I don't have to worry about in my portfolio, dude. Grindr just stays green every day. Literally even yesterday, bro, Grindr was down 0.01% or something. Grindr was just great. I just don't have to worry about it. It's just always there, making sure it's good. FedEx up 9%, Nike right here up 8.3%. Currently, right now. Did anyone buy the dip on Tesla? Did anyone buy this Tessie dip at 420 or below 450? 436. Tesla's green after hours, 439. And again, Palantir. I mean, look, I know people say the valuation's up there. I am one of those people. But in a little bit of a pullback, you would think the valuation gets a nasty nosedive, and that's not happening. Palantir is holding 70 like a freaking champ. It's not going to 80, but it's not going below 70. And I think that's the market saying, yeah, we kind of don't care about the valuation. We just want to keep holding on to this name, and any little bit of a dip, we're going to take advantage of, which is not bad. Sam said they bought 400 shares of Tesla. Mr. Ghost got Tesla at 421. Doug bought some Tesla, Pounter, Nubank. All right. People bought the dip. People did indeed buy the dip. All right, let's get an update on Micron, because Micron, where did it end during the day? Micron was nasty. Yeah, Micron's still down after hours, down 16% of the day. Let's get a little bit of some analysis on why Micron got hit so badly here today.
Second quarter guidance, but what the drop might not reflect. Signs of strength for the chip maker, especially in its AI-related business. Deirdre Bosa digs into the details for today's Tech Check. Hey, Dee.
Hey, good morning, Leslie. So the good news for AI bulls is that Micron's disappointing quarter was not related to its AI business. As Leslie just said, you saw a 46% jump in data center, which now makes up more than half of all sales. And the company said that AI and upgrades of traditional servers will grow server unit shipments more than expected this year. The downside, though, is that where it was weak, consumer-related chip markets like PCs and smartphones, that might signal that the AI upgrade device cycle is not gaining the kind of momentum investors were hoping for. And that could fit into this larger narrative of a digestion phase. The idea that after the initial rush to adopt AI technologies and infrastructure, companies and consumers are hitting a pause to digest them. Devices are increasingly part of the AI story because features are supposed to drive upgrades, progress in the models themselves, ChatGPT, Anthropic, Gemini. They drive use cases, but that's not happening the way that some had hoped, and that could hit the whole ecosystem. JPM cited a recent survey that highlighted lower momentum for the iPhone 16 cycle relative to the 15 on still lower awareness for Apple Intelligence. Those are its AI features. Now, that tracks with what we heard on Micron's earnings call last night. Its mobile business unit saw a 19% quarter-over-quarter decline.
That means people aren't buying as many phones, which means Micron doesn't have that much demand to put their memory storage into that many phones. And that makes sense, right? People aren't upgrading as much, but their data center revenue is up 400%. So you got to compare that with their actual business that's facing headwinds.
PCs not any better. Micron forecasting that market to grow just around 5% in 2025, most of that coming in the second half. Now, here's the takeaway. If AI device sales are not getting that AI boost, that could be further reason for the hyperscalers, Amazon, Microsoft, Google, to reconsider their own spending on chips and infrastructure. Why keep pushing for advancements in those large language models if the current ones aren't delivering substantial ROI? They start reporting quarterly results in late January, early February, and for sure the markets will be paying keen attention to their CapEx plans. Now, some of those worries about plateauing progress and underwhelming adoption, they have already been playing out in the markets, particularly for the chip makers. NVIDIA's forward price to earnings multiple, look, it's sitting around 30 today, 33. A month ago, though, it was higher, around 37 times forward earnings. AMD's has also fallen, while Broadcom is now the highest valued by that metric of the bunch, surpassing NVIDIA for the first time in a very long time. Its custom chips seen as winners in the next inference phase of Gen AI. Micron, so guys, basically it's another clue in how investors may be rebalancing their expectations based on the evolving dynamics of that AI life cycle. And that sort of reevaluating will hit everyone from the chip makers to the hyperscalers to the software companies developing on top of these models.
So look, I think that's a fair point in regards to what's going on with Micron. And we saw that in their revenue numbers, right? And that's what really messed up. Their guidance numbers for revenue. Like the street wanted 8 billion, they came in at 7 billion or 7.1 billion. So that is a concern. Now, in terms of the relationship between that and hyperscalers, I think that's a little bit of a stretch in terms of the argument she was making. The hyperscalers care about getting the best models to do things like Google did today, which we saw in the morning. Google partnered with Apptronic. Why? Because Google has these fancy Gemini LLM models, but the use cases for Google and those LLM models are not just so you can ask it questions, but they want to see it in the real world. And that's why Google partnered with Apptronic today. And they need to make their models better and better and better, aka they need to buy more and more chips from NVIDIA to train their models so that when they put their chips into these Apptronic robots, or when they put their models into these Apptronic humanoid robots, the robots are good. And then, by the way, NVIDIA gets a lot more demand because the not only do the models need to be trained using NVIDIA GPUs that get into the robots themselves need the chips to operate. Like, this is why when Dan's talking about this company is just like a very long-term, you got to have a long-term thesis on this. It makes a lot of sense. This is the one company that has an absolute monopoly on this intellectual property. It's not like Google and Amazon aren't trying to chip away a little bit at that IP, but they're not getting any close over the next couple of years based on what NVIDIA has right now. And that is why I think even if Micron and AI devices aren't getting that much momentum right now, that does not really translate to the hyperscalers taking away any of their demand for NVIDIA. Okay, so let's go through the bearish thesis that I said we would go through right here and try to kind of explore this argument to be a little bit risk off currently right now. So let's read through this. Apollo came out today with a huge call. Not only does Apollo see less rate cuts in 2025, Apollo also thinks there is a chance that we are going to get the H word to come back into our vocabulary as investors, which is hike. Today, Apollo officially said they see a 40% chance of rate hikes returning in 2025. So let's read through this. The Fed officially made their third interest rate cut of 2024 for 25 basis points. This marks a total of 100 basis points of rate cuts in 2024 as inflation reaccelerates. With all key metrics of inflation nearing or above 3%, CPI, PPI, etc., a new question arises. Are rate hikes coming back? Apollo makes the case that the economy is strong and growth has been robust. Over the past 2 quarters, U.S. GDP growth has been 3% and 2.8%. Today, it was at 3.2%. The Atlanta Fed expects GDP growth in the fourth quarter to be 3.2, today in the morning it was 3.1. Atlanta is expecting for Q4 to be 3.2, well above the CBO's 2% estimate of long-run U.S. growth. So Q3 came in at 3.1 today. Atlanta Fed says 3.2 is going to be for Q4, which means, wait a second, we have a decent amount of growth. Apollo notes that the strong economy combined with the potential for lower taxes, that's Trump, higher tariffs, that's Trump, and restrictions on immigration, that's Trump, could spark inflation. PCE inflation could rise by over 140 basis points due to tariffs, according to Deutsche Bank, which means higher prices potentially are coming in goods and services that we all buy every day. Recent data shows that inflation is already heading higher again. 3-month annualized core CPI inflation is now up back to an alarming 4%. 6-month annualized core CPI fell to 2.5% before rebounding back to 3%. This is before tariffs and tax cuts are imposed. Again, this is why that 10-year is being so stubborn, because before we get tariffs and tax cuts, which are naturally going to be a little inflationary, we are already seeing inflation come back via CPI and PPI. So PCE inflation, the Fed's preferred inflation measure, is trending sharply higher. 1 month annualizes at 3.5%, even though 1 month and yearly came in line with expectations, lower than last month. But if you annualize it, it is higher than before. And 1 month, 3 month, and 6 month annualized core PCE inflation were all back on the rise. Tomorrow's data, when we get core PCE, are going to show November's numbers as well. Meanwhile, the bond markets are trading like rate hikes already started in what Fed Chair Powell has called normal market fluctuation. Something does not add up. The 10-year note is now 90 basis points above since rate cuts began in September. Markets are not convinced. Oil prices are up. Our premium clients bought into the dip in 67. They're talking about when they recommended to buy the dip. And you got oil up from 67 back into 70. So basically, this argument, coupled with the analysis that now we have $36.2 trillion in debt, is an argument that the Fed is trying to seem like everything's okay, but you have oil that's slightly up, you have inflation that's up, you have $36.2 trillion in debt, you've got lower taxes, more restrictive immigration policies, and tariffs that are going to be even more inflationary, aka that could result in a potential rate hike. That is the bearish thesis that Apollo came out with today. Now, what's my response? I don't think it's that good of a thesis. I think logically, when you spell it out, it kind of makes sense when you put it together. Okay, that could lead to some inflationary problems. The problem is, I don't think we're hiking. Hiking was required in 2022 when inflation in June was at 9.9%. And quite frankly, it was probably at 12 or 13%. 9% was the reported number, but it was probably much higher than that. We are not at those levels. We're not at those levels. We're not at the levels to the point where inflation is getting that high. There may be some momentary increases in inflation due to a variety of things that are happening in regards to immigration, tariffs, lower taxes, etc. However, there's a lot of things that are deflationary. And I think we have to remember those things when we're looking at the data compared, because the problem with being super bearish is that you look at one stream of data, CPI, PPI going up, and then you're like, rate hikes, market's over. We're not going to be cutting anymore. Sell off your Google because it's going to be affected by rate hikes, yada, yada, yada. And honestly, Dan Ives was critiquing a lot of the people that think like that today. That is why they miss a lot of the broader bull market run, because you have to compare it with other parts of the data. What are some of the other parts of the data? Number one, AI is deflationary. And when AI becomes deflationary, that means we are going to have a lot of those inflationary pressures get offset by the job job decreases. And unfortunately, people will lose their jobs due to AI, which means less spending in the economy. And also the productivity increases, which will naturally be more deflationary for the economy. Number two, Chris was on the show today, and he talked about one of the main things that's driving CPI higher. The thing that is part of CPI's 40% increase month over month is shelter. Shelter is coming down. If you look at vacancies in comparisons, or if you look at vacant rents on the St. Louis Fed, that is at levels that we had during the pandemic. Or pre-pandemic. Is getting to levels that were back at pre-pandemic. Nike right here up 6.74%, Fedex right here up 7.6%, Bitcoin 97.6. So when you look at shelter inflation probably coming down, that is going to be very important because that's going to help CPI. That's definitely going to help the 10-year not stay at these elevated levels. And that's really going to help mortgage rates start to come down, especially as housing inflation comes down as well. On top of that, you've got a variety of things happening across the world, particularly in China. Right now, China is exporting deflation because their entire economy sucks. And so China does not have the leverage when it comes to us importing goods from them. They can't say, oh, you have to pay a premium, because we're going to be like, no, we just won't pay. And then your economy is going to get further in the hole. So all of the manufacturers, all the warehouses that are exporting into the United States, they are playing on the United States' terms, quite frankly, the entire globe's terms, because everyone knows China's economy is in the gutter. So as China's stimulating and they're exporting deflation here, along with AI being deflationary, along with housing inflation coming down, along with earnings growth that we have no real reason to think is going to fall off a cliff based on what we saw in Q3 and Q4 guidance, I think when you put that together, we're not going to get a hike. And if we do get a hike, I think that would be something unprecedented that happened. That would be pretty wild, right? Something that came out of nowhere. But I don't think we're going to get a hike. Here's the final thing I'll say on this. I don't think Jay Powell wants to hike. Robin right here down about 0.5% after hours as well. Because, I mean, you got Trump, dude. Trump's here. Take a look at this tweet from 2019 that Trump posted. I mean, if Jay Powell doesn't do what Trump wants him to do, we are probably going to see a little bit more of pain in regards to Trump actively calling for Jay Powell to step down. So Jay Powell says he's not influenced by Trump. He probably wants to do whatever he wants. And he's probably, I mean, in 2018, he did whatever he wanted. He didn't care. He didn't give a you-know-what about Trump. But there's going to be some pressure from the president. So this is what Trump tweeted on October 2019. People are very disappointed in Jay Powell and the Federal Reserve. The Fed has called it wrong from the beginning, too fast, too slow. They even tightened in the beginning. Others are running circles around them and laughing all the way to the bank. Dollar and rates are hurting our manufacturers. We should have lower interest rates than Germany, Japan, and all others. We are now by far the biggest and strongest country, but the Fed puts us at a competitive disadvantage. China is not a problem. The Federal Reserve is. We will win anyway. I love how he said we will win anyway. He's like ranted about Jay Powell, and then he's like, we're going to win anyway. So, I mean, look, it's human nature. I don't know if Jay Powell wants to get into an antagonistic, hostile relationship with Trump. I don't think he will get into that hostile relationship if he pauses. I think he'll get away with that. If he hikes, yeah, Trump, I mean, I don't know, dude. It's going to be a different world. So, although there's a bear case for the economy in regards to hikes, I think Apollo kind of put that out and they're trying to give people a different perspective. But realistically, Jay Powell hiking, that would be tough to see. Oh, Robinhood just listed another crypto. Shout out to Gene who just shared this to me. We got a new crypto on the hood. Ladies and gentlemen, as much as I wish Forkcoin was on hood, Bonk is on hood. BONK. There you go. I don't know what Bonk is, but I'm going to take a look at the price right now and see what's happening to it. So you got Bonk on the hood, BONK. It got a slight pump right here. It's up. It's still down. Dude, what is this thing, dude? Bonk is $0 and 0.00003 cents, which I guess is 1/5 of a penny. So there you go. It went. You see this little little move right there. How much is it up over the past 3 months? It's up 77% in 3 months. 1 year, it's up 40%. 1 week, it's down 22%. 5 years, it's up 40%. It started in 2021. Actually 2023, that's when it got listed. And then boom, you're down 2% today. More juicy crypto revenue for Robinhood. Why are they adding stuff like this? Well, I think Robinhood's not adding every single meme coin that exists. They're adding the ones that they think have a big community. And I don't have a problem with this. Look, at the end of the day, there's a bunch of stocks on the stock market. There's a lot of penny stocks that are crappy companies. Robinhood's not going to stop you from buying QBTS, some random quantum computing stock. If you want to buy it, you buy it, and you have to, live with your life if it goes up or down. Same thing with some of these crypto coins. Now, they're not going to list literally every single meme coin, just like Robinhood doesn't list every single OTC penny stock. But some of the ones that have developed a pretty big community and that have a lot of circulating volume and supply, those probably will be added because it's more revenues for them. And there's no reason that they shouldn't have those on the platform. Let me get some stats on Bonk right now. So Bonk is number 55 on CoinMarketCap. $677 million of volume trade every 24 hours of this thing. Market cap is 2.27 billion. Folks, this coin has a larger market cap, double a fart coin. So, it is a big coin. And there's 92.7 trillion Bonk, 75.7 trillion Bonk coins that are circulating on planet Earth. So, if anyone wants to engage in trading in it, now Robinhood has the ability for you to get access to it. Again, it's like a lotto ticket to me. A lot of this stuff is a lot of random stuff. But the reason they're listing it is because you got a $2 billion market cap. And that actually, for a meme coin, that's tough to do. To get a $2 billion market cap for a meme coin is not easy. And Bonk has been around for like a couple of years now. So it's actually weathered the storm. That's probably why Hood is listing it. Palantir up a little bit after hours. Tesla up a good 1% after hours, 439. SoFi up about 20 bips. MicroStrategy up 1.52%. Nike's up 6.3%. Nike's at 82 after hours. Fedex is up 8%. Rocket Lab's flat. Meta is down 0.4% currently right now. This is making Hood lose street credit. I think the opposite, dude. I think this is actually giving Hood a lot of street credit in the crypto community. Look, here's the thing. If you don't care about crypto, this doesn't affect your life. You're not going to invest in it. You're not going to care about it. You're never even going to search for it on the platform. But if you're a crypto person and you're a meme coin person and you care about these things, now there's another platform for you to trade it on. I think there is literally zero downside to doing this. There's only upside, definitely upside in terms of revenue. And the people that want to buy it will buy it. The people that don't want to buy it don't buy it. It's not that controversial to me. I think it's actually smart. And I want them to do more of these things. As long as they're coins that have like somewhat of a decent community, then I think they should list as many as they can. Dude, I think it's the same thing as stocks. Like, because if we're going to be like ideological about what stock gets listed, what stock doesn't get listed, then like we're not going to list most stocks in the market. There's a fine line between like OTC penny stocks and then just other stocks. But there's the same thing with like meme coins that have $10 million in volume, which is nothing, versus something that has $500 million in volume and a $2.5 billion market cap, right? Those, I think, do deserve to have a chance to get listed. Where exactly are these communities? On Twitter, all of them. If you search Bonk on Twitter, you're going to find a lot of these communities. All of them kind of hang out on Twitter. Probably some of them are on Discord and Reddit, but the far majority of them are under the tags on Twitter, and that's where they work. Rob, thank you for the $5 super chat. Amit, are you bullish on a Webull IPO SPAC? No, not really. Guys, Webull is from China. Anyone who's investing in Webull, has your money on Webull's app, your money is controlled by the CCP. Now, I don't mean to say get your money off of Webull. I don't really know the internal dynamics of Webull, but that alone makes me like, why are we bullish on a Chinese IPO? Like, why? What is so exciting about that? On top of that, I went through their IPO S1 filing. They have 7 million accounts. Robinhood has 25 million. I think their assets under custody are like tens of billions. Robinhood's in the hundreds of billions. There's nothing to get excited about. Let me check the valuation. Webull IPO valuation. I think they're getting valued at 7.3 billion. They're trying to go public at 7.3 billion. Robinhood, by comparison, is valued at 31 billion or 32 billion. And Robinhood has a lot more growth than Webull. So even that $7.3 billion IPO, maybe they can get that valuation in 2025 when IPOs come back. But in general, I don't know if Webull is worth $7 billion if Robinhood is only worth 32 billion. And when you look at the growth compared to both of them, one is growing a lot more. So yeah, again, I don't think your money's in trouble on Webull. I haven't heard of anyone who's had like issues with it, but at the end of the day, dude, like it's controlled by the CCP. We cannot ignore that. And I think it'll be okay, but and I know a lot of people that use it for trading. It's a good app for trading. Like it's not bad for options, all that stuff. But it's a Chinese IPO. It's not that exciting. You still have CleanSpark? I don't have CleanSpark. I sold CleanSpark in February. I had some options on it. I sold it at $16. I made like $1,000, and I put that into Robinhood. CleanSpark is still in the gutter, dude. CleanSpark has not been able to. This is one where I haven't liked CleanSpark for a while. And every time you talk to the CleanSpark people about this, like even after the convertible note offering, there were people under my post that were like, you don't get CleanSpark. I'm like, okay, I guess so. But Bitcoin's at basically 100. This is at $10. Bitcoin was at 30. This was at, when I sold, at $16. Like something's not adding up. Like I'm not trying to go into all the nitty gritty details and nuances. Like this is something's not adding up. Like if you can't explain it in one sentence, then there's an issue with CleanSpark right here. And again, they're not buying Bitcoin. That's the whole problem. All right, do you guys want to listen to Nike? Yes or no? Do we want to listen to Nike? Do we want to stay for Nike? I don't really care about it. I mean, I'll be listening, but I have some work I'll be doing as well. But I can play it if people want to listen to it. Who actually wants to listen to it? Do people really want to listen to it or not? I don't care that much, but we can try to listen to it. I'm seeing a decent amount of no's, bro, than yeses. I'm seeing okay, good. Because I don't want to listen to this thing either, bro. All right. So here, let me put the link in the chat for those that want to listen to it. This is the link. Feel free to go and check it out. Here's the link right here in the chat. Okay, good. Not a lot of people want to listen to it. There's the link in the chat. There you go. For those that want to listen to it, there it is. We'll look at the transcript tomorrow. Gene says, go on a rant. Bro, is that what we're going to do every day at the end of the market close? I'm just going to go on a rant for the next 30 minutes after everything's done. Goodness, bro. Yeah, okay. So if you want to listen to it, you can listen to it there, but we're not going to listen to it here. All right, so I'll stay on for like 10, 15 minutes, but that's the end of the market close. So we'll end out the actual market close right here. And we'll just do a little bit of Q&A, and then I'll get out of here. I'll be live today on Tech Talk today at 6 p.m. That's the show I do on Twitter Spaces. So we'll be talking markets as well there today. But that's the end of the market close. If you want to leave, thank you for being here. Tomorrow, market open, 8:45 a.m. And we'll be ending out the week for this trading week. It is triple witching day, so it'll be interesting to kind of see how the market ultimately reacts to that. 3 million puts, 1.5 million calls. A lot of stuff could happen tomorrow, but that is it today for the market close. What's Tech Talk? That is a show I do with a friend, a couple of friends on Twitter, a couple other accounts on Twitter in the FinTwit stock market world. And we just talk about tech for like 2 hours from 6 to 8. We weren't able to do last week, but we've done like 12 episodes over the past 12 weeks. So Thursdays, 6 to 8 is when we do it. Oh, wow. Gene just sent me an update. This is a big one. This is a big one. What is this? CEO of Figure. Exciting news today. Figure became a revenue-generating company. Wow. This week, we delivered Figure version 2 humanoid robots to our commercial client, and they are currently hard at work. It marks 31 months from filing our C Corp to getting to humanoid robot revenue. Holy crap, dude. That is not bad. There you go. Brett Adcock, CEO of Figure, just said they got some revenue. I have no idea how much revenue they're generating, but for him to make an announcement like that means that, to me, what I'm reading from this is that they secured like a legit deal with their commercial client. I don't know what that commercial client is. He keeps saying our commercial client. I don't know who that is, but I guess they officially paid him today. They paid that man. They gave him his money. And how much per bot? I have no idea, bro. He's obviously not giving any details right here. He says, hope revenue doesn't hurt our valuation. That's hilarious. Every time you start becoming a real company, valuations go down because everyone just loves investing based on the potential of stuff. This is a big deal. So this news, along with Apptronic today, again, I was very, very lucky to be an investor in Figure and Apptronic. This news by Chris Camillo, who made the announcement today with Apptronic working with Google. So now you got Google working with Apptronic. You got Brett Adcock, who just said they started making their first dollars of revenue off of these robots. And then you got Tesla with Optimus that's probably getting ready to be deployed. I think the humanoid robotics era is officially here. I think it's here. That's good news for Tesla. That's great news for Tesla, dude. That is great news for Tesla. Because look, Tesla's a public company. They're not going to make a big deal of like, hey guys, we got some revenue off our robot, because they don't need to. A, because they're a public company. B, they probably don't want to tell anybody what they're doing right now behind the scenes. And I imagine that they're probably securing some letter of intents and some deals. And I think in the first 6 months of 2025, they're going to make an announcement with Optimus, especially with all the teasers that they're doing right now. And even if they don't, it doesn't matter because they're internally working inside of Tesla. So as long as they can say on the earnings report, yeah, we deployed 5,000 robots in our battery cell factories, and this is what they're doing, and this is how it's actually making us more effective. If they can just give any inclination of that to the street's going to say, okay, can you do this for Walmart? Elon's probably going to be like, yeah, we can do it for a lot of companies. The street's going to be like, all right, we're buying the stock. Because if we think that's going to happen, then that's essentially what you're betting on when it comes to Optimus and that humanoid robotic thesis. Not bad. Not bad at all. Humanoids are a decade away. I disagree. I think humanoids are maybe in mass production 5 years away. Probably less than that. Probably less than 5 years. It's probably a decade away from being in your house and doing your dishes. It is like, I think, a couple years away from being inside of factories. I mean, Brett just said it. They just delivered robots that are working at their commercial client, whatever that client is. So that's happening today in 2024. That just needs to scale now. If that scales, I think we are in that era. Amit, how did you buy Figure? Again, I have a really good friend named Derek Wall. You guys know him. Has become a very good friend of mine, and he got me into the deal. He worked really hard to get me into the Series B. Honestly, it's just one of the things Derek told me a long time ago in February when we started talking is it's not about what you know, it's about who you know. And I think that's it's a capital T true thing in life. Like, it's really not about what you know, it's about who you know. And who you know gives you the opportunities to make sure what you know is on display. But you've got to know the right people to get there. And how do you get to know the right people? You got to network. You got to put yourself out there. You got to do a lot of hard work to get to know people. But, once you know them, there might be some opportunities to do things. And thankfully, I got to do that. So, dude, a lot of these private investments usually go to shit, dude. A lot of them go to shit. So this one it's very lucky that Figure is actually working out, because most of them go to shit. Like, most private investments suck. So this one is like a really good one that ended up working out. And that's because it was vetted for years by Derek. Like, he vetted it for a long time before he finally put in the amount of money he put in. But yeah, this one looks like a good one. You got to go to meetups. Yeah, you got to go to meetups, or you just got to put out content, right? When you start your own brand, you generally tend to, if you can attract some people. Like David Sachs, I talked about yesterday. David Sachs followed me. You know why he followed me? It was he liked so David Sachs liked my post yesterday or 2 days ago, and I was like, okay, cool. So we got some value from this. It was my stock market daily recap that I do every day, and then yesterday he liked it again, and I was just sitting on my bed. I got the notification because Twitter will notify you when someone like big likes your stuff, and I was like, all right, cool. He liked it, and then in my head I'm like, well, if he liked it 2 days in a row, he might want to follow me to get like more of the content, right? And as soon as I was thinking that, I refreshed. And we got that. We got the follow back. So that's pretty cool, right? That's pretty cool. David Sachs, I've listened to this guy for years. I respect him deeply on his thoughts on AI, crypto. He's a fellow Palantir investor. You never know. Maybe one day we can actually talk, or maybe do a podcast or something like that. But the point is, you got to put content out there, got to get people's attention. And then when you get people's attention, you got to put yourself in the right opportunity to get to know people, whether it's networking, content, and then that leads to the potential magnification of opportunities that you can take advantage of. Your network is your net worth. Correct. Exactly. Your network is your net worth. How can you explain how private investments work? Yeah, it's pretty simple. It's like investing in a stock, except you're not liquid, right? So there's something called an SPV, special purpose vehicle. In the context of Figure, I invested in a 40 million SPV, meaning $40 million were collected to be invested in a $675 million equity round of financing. at a $1.6 billion valuation, $2.1 billion post money, because you add 670 to 1.6. And then my 25,000 was a small part of that 40 million SPV. So you wire the money to the person who has the SPV, and then they wire the money to Figure. And then you do it through a website, Carta.com. There's a lot of different websites, but I think we use Carta.com. And then you sign the agreements, and then that website basically holds your equity until it goes public, and then it gets transitioned to a brokerage. Fidelity is the one that it usually gets transitioned to, or it goes to zero, which is what happens for 99% of them, and you never see that money back. And that's it. That's how it plays out. That's another reason I didn't have that, dude. So I put 10,000 in Aptronic and 25,000 in Figure, so 35,000 in February left my portfolio. And honestly, if I'd put that 35,000 in my hood options, those would be up 5x already, right? Because the hood options are up 5x. So that would have been 175,000 if I just put it into those hood options. But I put it into 2 startups, and that kind of sucked at the time because A, I needed to get liquid on 35,000. B, it's like, you're never going to see this money, at least for a long time. But instead of getting a 5x on some hood options, you could get a 500x, if Figure goes to like $1 trillion one day. So the potential of it is one of the more exciting things for private markets. But again, a lot of them fail, dude. A lot of them fail. So this one was one of the ones that hopefully didn't fail, or hopefully doesn't fail. Looking forward to him being a special advisor to the White House. Oh my God, that would have been funny. So when they IPO, you get your money back. Yeah, you literally get, Derek was telling me about it. When they IPO, because he's been in a lot of these private investments that go public, it usually goes to Fidelity. You get your shares transferred, the stock goes public, and then you see your 25,000 hopefully turn into like 5 million. Right? If you got in the early stages, and then you have a decision. Sometimes there's a lockup, but a lot of times there's not a lockup as well, based on what type of round you got in. You could sell right there. You get to be like, all right, I'm selling my shares. Boom, I'm done. I did my job. And who's buying it? People like you and me, right? Because I buy public equities. You guys buy public equities. Like when Reddit went public, there's a lot of Reddit insiders from years ago that bought their shares at 5 cents that are selling it at $34 at the IPO. Great return. And we're buying it at 34, and we're just hoping it can get to like 50. Reddit's now like 170, so it's done a good return. But it is a transfer of that money from one party to another. And the only reason the capital markets in the United States work is because people like you and I believe that a company like Reddit deserves to be publicly traded and not only allocated to the private markets. And that's kind of the benefit to startups going public. And we haven't seen a lot of startups go public. Next year, Chime, another fintech, I saw an article today, they're thinking of going public as well. A lot of these companies are thinking of bringing themselves to the IPO markets, to the public markets, which is a little sign of some froth. But that does mean that more people will have liquidity to these companies, which is not the worst thing in the world. Question, do you think that interest rate hikes by the Fed can negatively impact SoFi? Yes and no. A, I don't think interest rate hikes are going to happen. But B, it can hurt SoFi because interest rate hikes means that we're in an environment that doesn't prioritize growth stocks as much. And SoFi is a growth stock, so that could be bad for the stock. B, it actually could be good because their net interest income could go up, right? Because you have higher rates. So like they would actually make more money. But I don't think we're going to get a hike. I just don't think that's going to happen. And if we do get a hike, I think stocks fall, especially growth stocks, 5 to 10% in a day, because all of them are priced for like another 100 bips of cuts, at least over the next year and a half. None of them are priced for 25 bips of an increase. And so I don't think we get a cut, but if we do get it, or I don't think we get a hike, but if we do get a hike, that's not going to be the best. Klarna is going public as well. Databricks, yeah, all these guys definitely want to go public. We got a rant. I haven't even been ranting. I've just been explaining startups and going public. I haven't been ranting about anything. Watch me see a comment. Someone's going to say mayonnaise is amazing, and I'm going to go on a rant, and boom, it'll be there. Amit, I live in Panama. How can I open an account on Hood? Unfortunately, you can't. They're only in the United States. So when they go to Panama, eventually you'll be able to, but until then, you cannot open an account. Amit, you should start your own founders fund. That's cool, but you know what I realized, dude? I don't really like the whole VC investing thing. I mean, I didn't find Figure or Aptronic. Those deals were brought to me, and I was lucky enough to invest in them. But I kind of like, I don't like the idea of looking at a startup like on a napkin and thinking the startup could be $1 trillion company and then investing in it. I actually like looking at cash flows, a balance statement, revenues, free cash flows, EBITDA multiples, margins, gross margins. Can the company scale? What's their path to profit? Like, I like looking at that stuff. And I kind of don't like looking at potential. Just because, I don't know, the past 2 years I've been so deeply ingrained in covering markets. It's actually fun to me. Like this whole grab, thesis I've been developing. It's been a fun journey over the past month to like figure out what is the potential of this company. And I feel like it would, there's a better return if you're like 10 years ago, you're looking at the super app of Southeast Asia and you invest in it, and then you probably make a lot of money. But it's also kind of fun seeing it in the public markets and trying to figure out, can I get a double or triple on this? Because getting a double or triple in the public markets is not easy, right? So most people, you're lucky if you get 20 to 30%. This year has been an anomaly, but I think that's more exciting, actually. Who do you think you are, Chris Mateo? Chris loves it too, dude. When Chris finds a new company, he loves digging into it and getting deeper to try to figure out what could happen. Bro never looks at the multiple. Well, if you looked at the multiple, you would have never invested in Palantir. So you can't look at the multiple. No, I like looking at the multiples too. And look, Grab is expensive on the multiples. But again, this is where you have to see far beyond the horizon in terms of what's actually increasing. And for a company that made 15 million in profit, looking at PE is just like ridiculous, right? That's not the metric to look at. But looking at the cash they have as a percentage of market cap, and then their EBITDA margins and how that's like that's the stuff you want. And Chris said something new today. Apparently Grab grew 20% last quarter, but the FX headwinds made them 17%. I didn't know that. I thought they grew 17%. And I was like, okay, that's good. But 17% is not like in the 20% range. I want that to accelerate, but they did grow 20%. It was just FX headwinds. So like finding things like that out, like that's important. And I think it adds to the mystery of trying to solve the puzzle on if this company is a good company to invest in. Do you think SpaceX will go public in the near future? No, I think Starlink could go public. SpaceX, Elon doesn't need the liquidity to go public. Elon actually said yesterday, I don't know if you guys saw this, but SpaceX bought back their stock in this latest fundraising round. And Elon said they would have bought back more of their stock, but they wanted new investors to come into the deal. Yeah, this is the tweet right here. Elon said, we would have bought back more stock, but we wanted to allow some new investors to join. CNBC reported yesterday that they bought back some of their stock. Oh, right here. SpaceX is buying as much as 500 million in common stock as part of the offer. So, I mean, the fact that they didn't buy back their stock and they let more investors in, that's how much demand there was to get into this IPO or to get into this round, which means Elon doesn't need to go public, right? There's no like pressing demand from investors to go public. He has all the time in the world to kind of figure this out. And I think this is big for Rocket Lab. I agree. I think this is a big deal for Rocket Lab, dude. Rocket Lab at 11 billion looks like a joke compared to SpaceX. And the more I learn about Peter Beck, dude, honestly, I don't know a lot about Rocket Lab. I've got to do a lot more research. I barely know what Neutron is, but I like Peter Beck. I really like Peter Beck. And I have no problem investing in Peter Beck next year over Rocket Lab, the company, because I think Peter Beck's just a guy who's not. And also, I don't think Rocket Lab's egregiously overvalued. I think it's a bit extended. It's up 400% year to date. They're not profitable yet, but they're going to get profitable in the next 2 quarters. They're growing at 135%, which is amazing. And I like Peter Beck. I like him. There was an article that came out yesterday, a headline that says Peter Beck goes to work, comes home, has dinner with his kids, and goes back to work. I mean, that's pretty cool, dude. This guy does not stop working, and he really wants this to be a real thing. You guys are trying to manufacture a rant. I can't it has to be organic, bro. You can't just say meet Kevin selling a course about Trump and then I go on a rant. I didn't know he was doing that. That's why I went on a rant the other day. I was like, what? He's selling a course about Trump? How do you even tell a course about Trump? Like, he's not even in office yet. What are you going to say? So medium rare steak. That's funny. Dude, I'm telling you guys, I don't know if you guys haven't tried medium well, or you just like eating blood. But if you try medium well, just do it one time. I think you're going to change your mind. I really do. Also, TJ was on the show last week and he said he's a medium well guy as well. So that lets me know I'm not crazy. I mean, the fact that TJ likes medium well too, there's some other people out there that like medium well. Amit, are you on tomorrow night? Yes, I'm on tomorrow night. Let me actually show you guys my ugly Christmas sweater. Hold on. Let me get that real quick. Okay, so Palantir Weekly. This is my ugly Christmas sweater. Maui Christmas, meowie. So I'll be wearing this tomorrow on the Palantir Weekly 2024 recap. They didn't have any better ones. I know it's kind of cheesy, but they had this one. They had Will Ferrell, and then they had Mickey Mouse. And I was like, okay, this is like the best one. Also, the other ones were kind of orange. I wanted like a little green, red style. So there we go. That's what we got. That's what we got. I mean, you need a Pound Your Ugly sweater. Yes, that actually, I definitely need a Pound Your Ugly sweater. That would be nice. That would be nice. Do you think Powell's job is in jeopardy? If he hikes, yes. If he doesn't hike, no. But if he hikes, yes. That's not going to be a good thing. I don't think he's going to hike, bro. I don't think he's hiking. I hope he's not hiking, but I don't think he's going to hike. We got this video posted right here. I want to take a look at this right now. It's about Robinhood. Let me pull this up right here. It's an old video. Someone just is one of these people posted. Let me pull this up right here. Also, Vlad, if you guys want to see a new interview with Vlad, he did a new interview. If you guys want to watch it, it's up to you guys. Let me know. I haven't watched it. It's an 18-minute interview. We could end the show with watching that if you guys want to watch it. Ray says extra rare steak, mayonnaise, pound to 0, buy yourself a Rolex. I love how Ray knows all these like things about me. Ray, you've been in the stream for like years now, so at this point you know. But that's not going to manufacture a rant. All right, so we had Andrew Reed, who is a VC from Sequoia, one of the first investors in Robinhood. He says, two of the most innovative and independent thinking entrepreneurs I know, Vlad and Beiju, individually exceptional and collectively unstoppable. Much will be written of their journey building Robinhood, which is still in its earliest days. Here's a video from 2012. I've never seen this video, so let's watch this.
Catch up with my friend Vlad from graduate school. And at the time, the economic meltdown was in full swing. Vlad and I had talked for a number of months about his ideas for a startup that would change the way young people made investments.
We didn't want to spend our 20s licensing high-frequency trading software to large corporations. And we just saw a big opportunity to make a consumer play, build a product that could appeal to a large swath of the population. And that's how this new venture started.
This film offers a rare...
Oh, wow, they're making a film, bro? They're making a whole film on these guys? Oh, no, it's a podcast. There's an audio podcast right here. They did a brand new podcast on Robinhood. Wow, it came out 12 hours ago. Dude, they are getting some media coverage, baby, and they should. I mean, stock's done very well this year. A company has fundamentally transformed. And there you go. Nike's dropping. Is Nike dropping? Is it dropping bad? What are they saying on the earnings call, dude? Are they killing it? I mean, it's still green. It was really green. Now it's still green. But it is still green. It is red. It's down from 86 to 78 right here. Amid heard film and got scared. I would watch a film about Vlad. I would watch a movie about Vlad. I think I could. My attention span could handle it. Oh yeah, one of their head of cryptos. You know, it was so funny. I think I told you guys this, but I was talking to their head of crypto at the Investor Day. He's on a new podcast as well, and Vlad came up to us and he was like, "Is Amit asking for more meme coins?" And it was so funny because I was like, "No, I was not asking for more meme coins." But you know, Vlad has a sense of humor, bro. He's charming. He's funny. He's able to interact with a lot of people. He's a really, really dope founder. And he's had an incredible year. Okay. Do we want to end out with watching the new Robinhood podcast or no? Do we want to end it right here? I got to see enough yeses in the chat if people want to watch it. It's like a 15, 18-minute thing. They did a couple days ago. If not, we can end it here. And at 6 p.m., I'll be live on Twitter discussing the markets for another 2 hours and continuing to talk about equities and anything else that comes up. Yes. Wow, I barely see any no's. Damn, everyone said no to Nike. Everyone wants to see yes on Vlad. All right. Dude, can I ask a question? Because I don't think I've ever asked this question. How many people own Robinhood stock? Put a 1 in the chat if you own the stock. I'm just curious. How many people actually own a little bit of Hood? I think a decent amount of you own it. I don't think the far majority of you own it, but I do think a decent amount of you own it, right? Oh yeah, that's a lot of people. That's a lot of people. Michael said I sold at the highs. Not bad. Congrats. Mark says largest position at $9. Holy crap, dude. I'm Beneficial says I don't think I have to answer. Dude, do you own it or not? Don't be scared. We got to know. Justbell says I own a lot of hood. All right, dude. Look, this was, I mean, these two, I couldn't have predicted the two biggest stocks I would talk about this year would have done this well, Hood and Palantir. I really am trying to be humble about it because I don't know if you could do that again. Like, that's hard, bro. And I think Dan Ives, you could sense his humility in today as well when I was saying, oh, Tesla, Palantir, Nvidia. You could tell he was like, yeah, that's awesome, but like, it's hard to get these names, right? And it's hard to stay with the. That's why he kept saying, stick with the story. And I think the cool thing this year is with Palantir and Hood, all the ups and downs, we stuck with the story, and we got to the end of this year, and it's done very well. Palantir obviously massively outperforming, but Robinhood from the lows performing really well. And I think that both of their stories are just beginning. Both of their stories are just beginning. But that doesn't happen every year, bro. To go for two on like your main picks that you like attach your reputation to, like that's not easy to do, dude. That's and that tends not to happen. And so this is another thing in terms of being a content creator. Like you got to be really selective. That's why when you guys mention all these names and stuff, it's like until that's why like, oh, why don't you have some Archer? Why don't you have some quantum whatever stuff? It's like if I'm not really putting a position in and I'm not really putting my brand on the line with the name, then I'm not going to be interested in it in terms of like having a couple of shares here and there, right? And that means we're going to miss some stocks like Rocket Lab. Dude, we could have gone 3 for 3. If someone had convinced me hard enough at $5, admit Rocket Lab's the one, put that on the trifecta, we would be like Michael Jordan, bro. We would do a 3-peat in 1 year. It took Jordan 3 years. We would have done it in 1 year. We'd have had 3 multi-baggers in 1 year. But none of you guys actually pressured me on Rocket Lab. That's the problem. It's not my fault. It's your guys' fault. But still, if we went 3 for 3, that would have been nice. But all I'm saying is like as a content creator and like you start seriously talking about a company and really analyzing them and you attach your brand to them, it's like it's black or white. Like if you're associated with the company, even through talking about them via content, I mean, like, look, I don't mean to bring this up, but like we all know, like Jeremy with TTCF, right? Like he was going heavy on that name for a couple of years. And now we joke about it because, you know, people love Jeremy. It's okay. Like it happens, right? You have bad picks. But when it goes bankrupt, like it's not fun. It's not fun when something like that happens, right? And I think with Palantir, there was never the risk of it going bankrupt. The risk was that it was stuck for so long. And like no one thought if anyone would ever think of Palantir more than like a black box consulting company. And with Hood, I guess the risk was, is it just going to be a stupid meme stock trading app? And I had no idea Vlad was going to just like say, no, we're going for everything. We are going for everything. By the way, there's a podcast coming out with Vlad, not with me, but with someone else. And that's coming out soon. And I think you guys will enjoy it. So not with me, but there is a podcast coming out soon with someone else. And I think you guys will enjoy that podcast. That'll be out soon. SoFi will make the 3-peat. Yeah, that's true. We're up 400% on SoFi. We are up on SoFi. But I don't, you know, is $3,500 a real position on SoFi? Right? I mean, it's a good trade, but it's not like a position on SoFi. So I don't know. I don't think I can take credit for that being a part of the 3-peat because it's just not really a position. It's a good trade. Eventually, we're gonna have to sell those options. But Nike just went red. Nike just went red, bro. Holy crap! Nike just went red. Nike just went red. That is ugly. What did they say in the earnings call, bro? What did they say? Grab is next. Don't worry. We'll see. I don't think Grab's going to be like Palantir and Hood in terms of multi-bagger. I think Grab's going to be a good one, but it's going to take a long time for that one. So I don't know if that's going to be the third one. I think Grab has a chance, but it's just not going to be 300, 400% in a year. Like that's just not happening with Grab. So that'll be a long one. That'll take some time, but I still think we haven't found our official third one that we want to go after. Dude, why is Nike red? What did they say? What did they say? I have no idea. Bro should be a hand model. Oh my gosh. Oh my gosh. Derek Wall told you to buy Archer when it was 5. That's true. But I just didn't do the research on Archer. And again, I can't, at this point of my investing journey, I can't buy anything if I haven't done the research. Like, I won't hold it in my portfolio. A couple years ago, I could have just buy anything if someone says, oh, look at this side. But now I'm like, I really need to believe in it. Otherwise, it's tough. Okay, where's this podcast? Let me pull it up for Vlad. It was Index Ventures, Robinhood. But a lot of you guys did really well on Archer. You guys did great on Rocket Lab. Like, this is a stock picker's market. So many people have so many multi-baggers this year. For me, it was Hood and Palantir, and that was it. For a lot of you guys, it was all these other different names that did amazing. And it's been a good year for a lot of these names. Is the risk for Oklo bankruptcy? Yes, because there's no earnings, no revenue, but you know, they have some cash, which is important. The risk is they don't get more deals. And based on what I've read, I think they're getting a lot of deals, but if they can't continue to make those deals turn into real earnings, then yeah, they could go bankrupt. I don't think they will, though. I think Sam Altman, as part of that company, he's going to make sure that one hopefully stays afloat. Okay. Where can I see the Nike call? I'll put the link in the chat. Let me set up the Vlad interview. So this is 18 minutes. So we'll end the show on this. Let's pull this up right here. Here is the latest podcast with Vlad with Index Ventures. Here we go.
I was a math undergrad coming out of Stanford. I was actually not very employable. Sometimes I think about that, what my life would have been like if I had lots of job prospects, becoming an entrepreneur. It didn't seem that risky. I wasn't leaving something massive behind.
Amazing to have you here.
It's great to be here. I always love visiting London. It's familiar enough to someone who lives in America, but also quite different.
I wanted to touch on a few topics today. One is the journey you've traveled all the way to here. The second one is your learnings, sort of messages that are really profound and universal for other founders. So maybe we just kick off with that. The first question, your journey from Eastern Europe, from Bulgaria. What is at the core of your identity and belief system and motivation that you've retained and that has really carried you on that journey?
Figuring out like my occupation as an entrepreneur, that came to me relatively late in life. When I went to Stanford as an undergrad, I didn't really have the intention of being an entrepreneur. I didn't really see entrepreneurship around me growing up. My dad had a small business in Bulgaria, but that was sort of like, I was too young to remember. He ran a small tourism company where they would take French tourists around the Bulgarian attractions, and he kind of grew that business. But growing that business was like buying another bus. It wasn't like a technology business. And then when I moved to the US, I was on the East Coast in Northern Virginia, which, you had the .com infrastructure boom and America Online was there. But other than that, there wasn't really too much entrepreneurship that I was connected to. Growing up, I'd say my childhood was really driven by the pressure that I felt as the only child, and that my family felt of like making it into this new country. My parents immigrated with basically no money to their name. I mean, I still remember seeing the photo album of my dad when he got his first paycheck in the US. Somehow he had gotten coins and he had like dumped the coins and a few bills on the bed, and he was just like so proud to get some money in this new country in the local currency that we took one out of 32 pictures on the camera roll was like dedicated to this. I knew that I had to do well in school because the college was not certain. I had to probably get a scholarship.
That's very inspirational, and clearly the pursuit of excellence and kind of having to make it is at the core of it. What was the transition moment to actually leave academia, go and start a company?
I found out that I was good at mathematics and physics pretty early on, and I kind of continued taking more and more challenging math classes and kind of challenging myself academically and doing well in school, all the way through to grad school to a math PhD. I met my future co-founder and great friend Beju Bhatt, who was also a physics major who transitioned to math in undergrad. We met at Stanford, and we noticed we had some similarities. We were both immigrants, or children of immigrants in his case. Both grew up in Virginia, although I was Northern and he was Southern, and both only children. So kind of like similar
there was a bond.
pressures. Yeah, similar pressures, similar upbringings. And, we both had like childhoods where much was expected of us. And we both like to challenge ourselves by taking these very difficult graduate level classes that you would get no credit for, either from the school, from your peers, or from prospective employers.
So you went the extra mile.
When I got to grad school, I went to get a math PhD at UCLA. I think it kind of dawned on me that this was a career, and the study of math and kind of like these advanced subjects, while interesting, was not the career that I wanted. Someone gave me this gift, which was a book. It was called the Mathematician's Survival Guide. And it talked about how to navigate the bureaucracy of the graduate department, how you deal with the department chair, how you kind of like negotiate for some research grants so you could spend less time TAing graduate classes and more time on research. And I was like, man, I chose this field because I thought the lion's share of my mental capacity or time could be spent on interesting problems. But then I was confronted head on by the fact that this was a job like any other job. And there was just a lot of stuff that you had to do that was not research. I saw other immigrants in the department. And I kind of imagined my dad. And so they were spending, 20 to 22 hours a day on math in the classes. Afterward, all of their free time besides sleeping was spent on the research and the actual study. And I thought to myself, well, am I passionate enough to be able to compete with these people?
And where did the choice come between go and join a quant fund as a mathematician versus actually start a company? And many people think that Kronos Research was your first company, the predecessor to Robinhood. Actually, it was your second company, right?
Yeah. Well, I'll tell you, I was actually not very employable coming out of undergrad, believe it or not. So I was a math undergrad coming out of Stanford, and I applied to a couple of jobs. One was to be a derivative trader at a Holland-based algorithmic trading firm. The other was I applied to a small startup called Weatherbill that ended up turning into the Climate Corporation. It was funny. The co-founder of that company is now on the All In podcast.
That's right.
So I went on the All In podcast one time, and I was like, "Hey, you remember interviewing me when I was a senior? I didn't get the job." So we had a nice little laugh about that. But math skills were actually not in high demand in the marketplace. Everyone was like, "Can you program? Can you do this?" And I was like, well, not super well. I'm a mathematician. I can solve these difficult theoretical problems. But I was not very employable. And this was 2008 during the global financial crisis. So nobody wanted to hire me. I didn't even get an interview at Google. I think math majors are much more employable nowadays, but this was sort of still like early pre-mobile, pre-AI and machine learning. My skills weren't that much in demand, which was a rude awakening for me. I think the initial jump to becoming an entrepreneur, it didn't seem that risky. I wasn't leaving something massive behind. And I actually sometimes think what my life would have been like if I had lots of job prospects and a lot of like super high paying job offers. Sometimes I think about that. Well, if someone's on like an amazing career path and they have a cushy situation, maybe they would have been a great entrepreneur, but the fear of loss, the fear of sacrificing something is keeping them from doing it because they'd be giving up something that's like very comfortable.
So moving on from your first and your second startup, which you did with Beiju, first topic to unpick would be the importance of the courage and the idea, but also that as the company grows, of course, Robinhood was the one that really took off.
Yeah.
There were all these other things, people, hiring, culture, regulators. Can you sort of weigh those two aspects and sort of reflect on those sort of the early motivations, you going into something unknown, but then once that takes off, it takes you to a whole new world of different skills and things you have to do?
I didn't start out intending to be an entrepreneur by any means. I wanted to be a mathematician. I wanted to create new knowledge. And what really got me excited was this idea that if I create something as a mathematician, maybe kids in school would be learning it hundreds of years later, right? If you think about the great mathematicians like Gauss or Riemann, you know, every kid in school learns their product, and their addressable market is hundreds of millions, if not more. And I thought that would be really awesome if you could produce something like that. So when I became an entrepreneur for the first time, and our first venture ultimately was not successful, but I think I discovered an element of that original desire. It was just being an entrepreneur and taking all of my energy and all of my faculties to produce something and working for myself and not really being beholden to anyone other than the customer. That was just a very intoxicating feeling. And I poured my heart and soul into it. I would work basically all hours that I wasn't sleeping, you know, with Beiju. And it was so exhilarating that even though it wasn't successful and we weren't having like any material success really, it was enough for me to say, okay, I'm not going back to school. This is my path. This is what I want to be. That kept going for about a year until I felt the pressure of actually needing to be successful. It's like, I can't ask my parents for money. Everyone's just kind of starting to talk about, you know, whether I made the right decision, friends, family members, like, what is he doing with his life? So the second stage was needing to work on something that's commercially successful and generate some revenue. And then we did that with our second company, Kronos, which, you know, when we built it out, was bootstrapped, got to a few million in revenue. And we saw a path to getting to, you know, tens of millions of revenue. And I'd say the third transition that I made as an entrepreneur was working on something that passed the kind of legacy test for me, meaning that if my life was defined by this business, would I be very, very proud of having brought this into the world? Would I want it to be my legacy, or would I not? And then Kronos, which was selling algorithmic trading software to big banks and hedge funds, really didn't do that for me. But Robinhood did. And I think there was lots of challenges that you mentioned, you know, learning how to manage big teams, compliance, you know, and having to build the company, going through the IPO, all of the crises. But I think the most important thing is I was working on something that I was legitimately very proud of. And I think when you're doing that, when it's a mission you buy into and a technology and a product that you really care about, I think you're willing to put up with a lot, because you know that at the end of the day, this is like your life's work.
That's interesting.
Okay, we'll end it there. I definitely agree. This interview was a little boring. There's like 5 minutes left if anyone wants to watch it. So you can watch it right here. Put it in the chat. Yeah, I mean, it was just not that interesting of an interview. And again, it's for us, we already know a lot of these stories. I mean, I interviewed Vlad. I asked him all the same questions, all this stuff. So all of us kind of already know his answers to this stuff. But for people that are new to Robinhood, seeing it for the first time, you know, they probably would have got a lot more value out of this one. Also, I agree with you guys. The pacing was weird, bro. Like it was not really that. I don't know. I feel like there were too many cuts in between, or like the question to the answer, you could tell there was like a quick jump start or whatever. So it was a little bit of a weird thing. But then again, it's more of a highly produced thing that's on this YouTube channel for this VC. So yeah, that's what we got from Vlad. Someone was asking for the Pokemon chat. I'll share that right here. We had a really good time last night for those who were there. I was on Nostalgianomics. That was the channel with Steve and his friend Alex. And it was really fun. We went for like 3 hours. And we got to talk about Pokemon investing. Dude, the community in that chat was so passionate, bro. Like, I was like, well, so, you know, why do people like Pokemon cards? And it was like, who's this fucking idiot who doesn't know? It's just like, I'm just asking, like, why are Pokemon cards? Like, why do you guys like these things? That's all I was asking. And then I was like, yeah, but like, why can't we make NFTs out of these cards? And the chat was like, this idiot, what? He doesn't know anything about. I'm like, yeah, I'm like new to this space. I'm just trying to figure why do you need to stare at the card? They're like, there's something about the physical touch of the card. I'm like, okay, I guess staring at the card is so important. But dude, people love Pokemon. People love Pokemon. I'm convinced there's a massive market opportunity in Pokemon, by the way. I mean, like the stuff we talked about last night, there's definitely an opportunity in diversifying into Pokemon. It's not as liquid of a market, but it definitely is a market. Nike is down by 1%. It looks like they said something about promotional offers on the online website going away as well. And that's another thing that I think is pissing off some people on Nike. They also announced that there might be some guidance declines, but there's got to be a bigger question here for why it lost 8% after hours. At least it's not literally down 8%. It's down 8% from when it was up, but at least it's not further down 8%. But they said something on that call that was not good. Something on the call that was not good. That's a biased take, Amit, since you had a bunch of Pokemon enthusiasts. Yeah, I mean, my idea was like, wait a second, why doesn't Pokemon the franchise just start like a digital version of the cards, and then you can trade them back and forth, and the market gets a lot more liquid? And then everyone in the chat was like, no, you need the card. And I'm like, okay, I guess we need to stare at the card. Like, I guess the card is that special. I don't know, dude. I'm not the Pokemon connoisseur, so I don't really. I never like cared about baseball cards or anything like that either. But I guess the physical product in that industry means something. It is very important, I guess. My kids have a big box of cards. I used to buy them every time I went to the store. Yeah, that's another thing. The box. Steve said, why don't we fractionalize the box? Like you can buy a fractional share of a stock. And the chat was like, no, that'll ruin the experience. It would make it more liquid, but I guess it would ruin the thesis of buying the box. Nike is still the leader. They were a turnaround story under the new CEO. Well, I think that's what Ackman's betting on. He's definitely betting on this turnaround story, but I don't know. Something happened in earnings where they're not getting that turnaround story, at least right now. At least right now. Magic the Gathering is way better. Dude, I have a bunch of friends in high school that cared about Magic the Gathering. I'm not going to lie, bro. The friends in high school that were in the corner playing Magic the Gathering, some of the nerdiest people. Now, I was on the debate team and I was a nerd. So I was a nerd. But the Magic the Gathering people were nerds, bro. Like Magic the Gathering, bro. That sounds like the nerdiest game ever. And I was already a nerd on the debate team. But apparently that's a big community as well for Magic the Gathering. I knew you had Magic friends. Well, I had friends who cared about Magic. I never like sat and played the game with them because I don't know. I just never was interested in it. But yeah, we definitely had friends who cared about it. Sarat says you are a great speaker. Initially, I thought you were too biased for Palantir. You know, one of the things I think that hopefully new people, and I'm sure Sarat, you're new to the channel, that have been witnessing on these streams, is that I think we try to be pretty objective on Palantir, dude. Like obviously we have excitement and energy and all this stuff, but I'm the guy that's been saying since 40 it's expensive, and I've been wrong, right? Because I mean, literally, the market has said no, it's not expensive at 40 and 50. Now we're at 75. But I say that because I always want to be conservative. And look, objectively, at $40, $100 billion market cap, it was expensive. Right now at 160, it's still expensive. But I think the fun part of the communication skills is how do we translate the valuation to make sense of it, even if numerically it's expensive, which is kind of what Dan Ives was talking about this morning as well. By the way, I'll be posting the interview for those that haven't watched it in like 20 minutes. So it'll be on YouTube with chapters and all that stuff. But for those that missed it, it'll be on there. But yeah, I really don't think the channel is that biased towards Palantir. I think we're pretty objective. Really, I think we are. We get excited about stuff, but if something is bad, we'll talk about it. If something is, and Palantir Weekly is, I think, the most objective on Palantir. Arnie, Amir, these guys are very objective. And again, tomorrow, Palantir Weekly, Arnie, Dom, Code, Amir, Matt Money, Ugly Christmas Sweater, Palantir 2024 recap. So that will be a fun weekly episode. Are we all nerds to be spending 3 hours daily listening to a nerd? Yes. Dude, we were talking about this last night in terms of the TAM of YouTube finance, right? Because I was asking the guy, okay, so what's the TAM of Pokemon, right? How many people actually care about it? Because you need to have a market to sell to. And in YouTube finance, I would say there's about 5 million people actively on the platform out of 2 billion that care about YouTube finance. Why do I say that? If you look at CNBC subscribers, it's about 2 million. You look at Meet Kevin, who's like one of the biggest channels there. It's like about 1.5 million, right? Or almost 2 million. So you take that and you add up all the other channels that talk about finance. I think maybe you push 7 or 8 million, but realistically, out of the 2 billion people on YouTube, there's let's assume 10. Let's be a little bit more gracious. 10 million people care about finance. And so that's the TAM in terms of the audience that potentially could be interested in my content. And that makes sense, right? Because most people don't care about investing in general, right? So it makes sense that a far majority of the human population that doesn't care about investing, they wouldn't care about watching investing content. So your TAM should be limited. But the 10 million people that do care obviously want as much information as they can. Like me right now, I'm doing my DD on Grab. Dude, I'm trying to find anyone talking about this stock. And now I'm kind of realizing what people felt like in 2022 when they were bag holding Palantir, which is a lot of people, right? They were trying to find anyone just talking about this stock. Thankfully, we're not bag holding Grab, but we're still trying to I can't find any. There's like one or three videos on YouTube that have actually done like a DCF and analyzed it. There's just not enough content. So, and that's because there's not enough people that think there's enough of a market that people that care about Grab. And fortunately for Palantir, that market kind of formed. But the reason I'm bringing all of this up in terms of market and TAM and opportunity for YouTube finance is because when you said, are we all nerds that are listening to a nerd talk for 3 hours? The fact that many of you spend hours of your day listening to the market open, market close, or just any general commentary, right? CNBC videos, all that stuff. I do that all day. I've got CNBC on in the background. I'm listening to this stuff. It means we are a dedicated part of the TAM, even if our TAM is significantly lower than like makeup videos on YouTube or music videos on YouTube or, TMZ drama topics on YouTube. So we're all nerds, but we all enjoy being nerds. And I think that's the cool part about this community as well. And we're nerds that are making money. As contrast says right there, nerds make money. Yeah. I mean, when you got a lot of money tied up in a Grab or a Palantir or a Hood or a Tesla or an NVIDIA, like you need to find content that can give you a better understanding of, what you're investing in. Oh, I'm getting a call from someone right now. Oh, hold on. Let me see. Let me call him back. Let's see if he picks up. Let's see. Let's see.
Hello?
Derek, you are live on the market close. What's up?
Oh, no. Hi, everyone.
Dude, did you see the Figure news?
Because I saw your post about Figure and then Aptronic, and I'm so proud of you that you're in both those deals. That's just shocking. On today's probably the biggest day for these companies, for sure.
Dude.
And I wish that, it's so awesome with respect to private companies is that I'm sure if they were public, these stocks would have doubled. So I think your private portfolio is doing better than your public portfolio.
Yeah, and obviously you're the reason that I'm in these deals, so I'm very thankful for that. But Brett just said they got some revenue, bro. Like, they got some revenue on this startup. I mean, that's a pretty big deal. That's exciting.
Yeah, it's big.
It's a very big deal.
31 months.
Yeah,
that's why I was calling. So I'll let you go. I don't want to bother you. I'll listen in. But I wanted to say congratulations. That's awesome.
Yeah,
it's a big day. As an investor, private investor in these deals, it's a big day, very big day. And I think that it's going to be the next revolution. It's
Okay, so hold on. But before you leave, I want to get your quick thoughts on humanoid robots. We've been talking about it all day because of these pieces of news. You've been investing for a long time in this. What is your general thesis on where you think this is going the next 10 years?
Well, this is the largest TAM any human has ever created, meaning that the replication of what a humanoid is will be greater than the population of the world. In 100 years, 50 years, whatever, there'll be billions and billions of humanoids. There'll be more humanoids than humans.
Wow.
By a factor of 2.
That means there's going to be billions of these things walking around.
That's why Tesla will probably, and don't laugh everyone, I think 25 trillion is possible in the next 10 years, but I think Tesla has a shot to be in the 50 or $100 trillion company. The reoccurring revenues off of this stuff is just imagine these things are just replacing like the phone market, but 100 times bigger. This is 1,000 times bigger than car market. And what's awesome about humanoids is that it's 1,000 parts to make one. Cars are 10,000.
Yep.
Computers are 3,000 parts, and you can fit it in your hand. Any assembly line can carry it. So you don't need these massive gigafactories. And so I think the production is a lot easier. But yeah, I think over the next 10 years, it's going to be life-changing for us to experience these in the real world.
Yeah, I agree. We're watching a video right now of Figure at BMW. It's pretty incredible. So thank you, Derek. I was just talking about you before you called that they were saying, how'd you get to invest? And I was like, Derek just, he fought to get me in these deals. So I appreciate it, man. Thank you so much.
Take care, everybody.
All right, take care.
Bye, everyone. Have a good weekend. Bye.
Bye. 50 trillion to 100 trillion by Mr. Derek Wall. That's his call on Tesla. I mean, if it happens, then that one share right there, that one physical share, yeah, that's going to be worth a lot of money one day. But see, this is why I keep saying I want to establish a Tesla position, dude. It's like, forget everything else. I'm so convinced that these bots are becoming real. I did that whole analysis against Joseph Carlson, which, by the way, he hasn't responded to. I don't think he necessarily had a response for my numbers because I came with the facts, baby. I came with like 20 different facts right there. So I think he was like, all right, there's no way I can answer all this. But I did this long post. I'm putting it right here in the chat. He says Amazon's TAM around e-com is bigger. And I'm like, what? No, we're talking about the labor market that has 50% gross margins. We're not talking about e-commerce that has like 5% margins after you take away all the costs of like delivering a water bottle. So John says, why haven't you established a Tesla position, especially given the recent dip? Tesla's 400 something a share. When I establish a position, I want to do 100 shares at a time. That's just a rule I'm making to myself as an investor. I don't have 40 grand liquid to put into Tesla. So next year we will get into Tesla. We will sell puts to scale into it. I also don't want to buy it at $480. Like I would like to sell some puts and like naturally scale my way into it. But I think we got to have Tesla in the portfolio, dude. I just can't imagine a world in the next decade where there's no Tesla. I just can't imagine it. I can't imagine it. We've got to have this thing in the portfolio. I mean, Mr. Derek Wall with the 50 gifted. Reason he can get 50 gifted every day is because he thinks Tesla going to freaking 100 trillion. And he's got God knows how much freaking Tesla stock. So this is why 50 gifted is a couple pennies to him, because he's like, well, Tesla's going to 100 trillion. He's probably wanting me to take this 50 gifted and go buy some Tesla with it. So, but again, like when Derek says 50 to 100 trillion, I know a lot of people can think, all right, that's wild. But like when you look at the math around robots, and again, one quick stat from that big response I did against Carlson, very simple stat, which makes Derek's prediction not look that crazy. If you have 1.5 billion robots by 2040, which is not crazy to assume, that's 31 trillion in revenue and 15 to 16 trillion in profits. Market cap projections, if you put a 30 PE on 15 trillion, is a $450 trillion market cap. There are $300 trillion in bonds right now across the globe. This is this is the biggest TAM ever. Tesla doesn't need all of that. I mean, even if they only become a $25 trillion company, that's incredible. And Tesla just needs a small slice of that 450 trillion. You're probably not going to put a 40 multiple on Tesla. You're going to put more like a 50 to 60 multiple on Tesla because it's Tesla. And Tesla has a shot to be worth that 25 to 30 trillion. And then we're talking about energy. Then we're talking about FSD. We are not even factoring. I mean, if you assume FSD is worth 8 trillion, which is what Kathy Wood assumes, Dan Ives thinks it gets closer to 5 trillion. And then Optimus at 25 trillion. And then energy, give it another 2 trillion. You're inching your way up to 50 trillion. And it sounds crazy, but it would have also sounded crazy to think that you can ask this LLM a question and then it just produce. And I've been using ChatGPT so much every day. It's a part of my life. Like I can't imagine my life without ChatGPT, Grok, etc. If you can't imagine your life without robots one day, then that thing is going to be the physical embodiment of AI. We just saw Google's partnership today. Like there's just so many obvious signs that this is going to be a big industry. That's what it feels like. Derek saying I wasn't crazy. Yeah, I mean, look, when I'm sure a lot of people thought he was crazy when he invested in Figure early. He was in Figure early, Series A, $70 million valuation. He was there. Literally, you know, I was talking about ideas on a napkin. That Derek was that VC, ideas on a napkin. Like literally, Figure was just an idea on a napkin. was crazy at the time to invest in it. But now, dude, I feel like Figure is close to 50 billion right now, and it just raised at 2 billion. If Brett's saying they're generating revenue and they have a real commercial client, which is what he announced today, I mean, I don't know, but it's definitely closer to 10 or 15 billion for sure. And then then you get the multiples in question, then you get the amount of deals they have. All that will probably be information available to us in the next 6 or 7 months. But this thing's not stopping. And then Nvidia, why is Nvidia probably going to 10 trillion? Because they're making all the chips. They're making all the chips. They're making all the chips for these. All of these robots cannot walk unless they are trained on chips. They need the GPUs that are in. So that's why OpenAI invested in Figure. Microsoft invested in Figure. Nvidia invested in Figure. Jeff frickin' Bezos invested in Figure. Why? Because they all knew this was the manifestation of an AI revolution. And there's the press release right there for those that are wondering if this is accurate or not. February 29, 2024, when this came out, Microsoft, OpenAI, Nvidia, Jeff Bezos, Parkway, Intel Capital, and others investing in Figure, $675 million at a $2.6 billion valuation. Look, Amazon's probably going to be a player in this, but Amazon's going to want, I think, to use the robots more so than create them themselves. And they've created their own robots internally that they're using. Same thing with Walmart, right? They're experimenting with all this stuff. But the real players to me are going to be Tesla, Figure, Apptronic. And then there's going to be a bunch of Chinese players, but I don't think anyone is trusting the CCP robots. I mean, would you trust the Chinese robot doing your dishes? That thing might turn around and kill you or something, right? So like, or any freaking Chinese robot inside of an American company, like with all the cameras and all the data that could be going back to the CCP. So I think it's a Apptronic, Tesla, and Figure world. That's it. And if that's the case, then this is going to get very, very exciting. Amazon has strikes. Yeah, Amazon has strikes right now. Dude, Amazon, they just had a bunch of robots that are getting, or not robots, humans that are getting ready to strike. Amazon wants to get out of here. Amazon wants to replace all these people. All right, I got to get out of here. I have a Twitter Spaces at 6 o'clock. Thank you, everybody, for being here. I'm late to that Twitter Spaces. We'll be back on the market open, 8:45. Bye, everyone. Have a good one. Dan Ives' video will be up in a second. I'll see you guys tomorrow on the market open. Bye, everyone.